Well, hello everyone. Hello out there. I hope you're having a great day off from the market, and I'm glad you guys have joined us. Welcome to What Went Wrong. My name is River, and of course, my compatriot, my co-host here, 7 Star Mike, is here very early in the morning out there, right?
What's up, everyone? This is way too early to be up on a closed market day, but we've got some important stuff to discuss. So I'm happy to be here chatting with you guys.
Yes, no doubt. So, yeah, and if you don't know, Mike is on the West Coast. I am on the East Coast in the mountains. He is the full-time trader, this the assassin, the hardcore full-time trader, and well, I'm the cute one. I'm the pretty one.
I see how this works.
That's how you can keep us separate. Yes, people are people. All right. So anyway, like we said, welcome to the special holiday edition of What Went Wrong, losing trade analysis and discussion presented by Black Box Stocks. We are your hosts, and we're excited to be here today. And we're just going to get on the road. You can contact us and follow us in various places. We both work at Black Box Stocks, and we love it. So here's the deal. What went wrong? The idea is this. Too often, people talk about their gains and they post all of their amazing trades that they made 22 billion% on. And sometimes when you're newer to trading, or even if you've traded for a while, it feels like everyone's making money but you. And that's just not true. Everybody takes losing trades. Everybody loses. The idea is at what went wrong that we're going to just take a time for some casual conversation. It's very laid back. We're going to analyze some trades, but we're going to look at what we can learn from losing. So you can think of learning this way. You take an action, you fail at it, you reflect upon the failure, you refine the action, and then you redeploy it. You redeploy the action. That's one iteration, then you repeat it. That's how I have been learning about trading over the last several years. And you can't take that second step out. We do believe here, and I think virtually anyone who trades is going to understand quickly that you learn from failures. So that's the spirit of what you're in for today. That's the general theme, just open and honest discussion about learning from losing trades. Mike's a full-time trader. I'm a part-time trader. I'm an active part-time trader. And we're just happy to be here. What is it like where you live right now, Mike? What is the mornings like on the West Coast? It's got to be beautiful.
It's a little cloudy and overcast right now, but that will probably burn off real soon, and hopefully the sun comes out.
When it gets below like 60, do you guys freak out en masse?
Yes, that is unheard of. It's not allowed. It's not acceptable. It's not why we moved here.
You could have cloudy and below 60 all over the country. That's not why you're paying that rent. I understand totally. So as you guys are joining us live, thank you very much for joining us. I see you guys are here. Let me know too. Where are you guys from? Just kind of practice asking those questions. Definitely. Let me know where you are, what's going on. As far as today, we are going to focus on position sizing, risk management. It's going to be the first road we travel down. We're going Amarillo, Texas. Hello. I'm distracted by all these amazing locations. I'm glad you guys are here. Position sizing, risk management, and selling too early. It's my opinion those things are closely related. But we're going to kick it off for sure with 7 Star Mike has got a little, not a little, he's got a very important set of lessons for us about position sizing and risk management. And I'm excited to see what you've got for the people who are, as you can see, for all over the world. And that's amazing. So, Mike, what do we need to know? I'm a new trader. I'm going to take the point of view of a new trader. What do I need to know about position sizing and risk management?
So I always say trade management is the most important thing you can learn as a trader, because you can have any system in the world as far as how to find trades, how to find entries, how to get into trades. Without proper trade management, no system is going to work for you. Perfect example. We have trades that we've called out live where people got into them. They were up 60, 70, 80%. And 2 weeks later, they're complaining about how they took a loss on that trade. And we're like, how could you possibly have taken a loss on that trade? We were up 60% at one point. And they go, yeah, well, it went from 60 to 80 and I thought it was going to hit 100%. So I held on to it.
Oh yeah.
So no trade system in the world is going to work for you if you don't have any kind of trade management. So one thing is getting into the trade. A whole completely different ball game is how to manage the trade once you're in the trade. And if you don't know how to manage the trade, you can be up and then you can be down and you can be taking these losses on trades that you shouldn't have taken a loss on. Now everyone's risk tolerance and trade style is going to be different. So how you manage trades, it depends on your trade style. It depends on, I have a $1,000 account and that's the entire net worth. I'm going to trade that differently than I have a $1,000 account and I have $1 million in the bank, right? So our risk tolerance comes into play. I have $1 million in the bank and a $1,000 account. I can put all $1,000 into one trade, lose it, and not care. My entire net worth is $1,000. I have a $1,000 account. Well, I have to manage that completely differently because my risk tolerance is much, much, much smaller because I cannot take risk with that money. So your risk tolerance and your, I guess, overall financial status or just your intentions with that account, we can put it that way, right?
Yeah.
Your intentions with that account and your risk tolerance are going to come into play as far as how you manage trades. So two people can be in the same trade and manage them differently, and both of them will be okay because they have a different trade style or risk management.
Yeah, when I started, this is important. When I started, back in the day, I had a $5,000 account, and my mindset was, okay, so this is money that I don't want to lose it, but I can if I need to. So I was able to. But I remember taking positions that were just like too big for that account, and when things would get even just a moderately red on a position, I would just sell, and it wasn't based on the chart. It wasn't based on anything but fear. And I felt that early on, even with an amount that to me was literally play money. It even came into that even came into a huge psychological effect when it was money that I could lose. So, do you think that position sizing, I'm sorry, risk tolerance is hard for people to figure out in the beginning?
I think there's two types of people. There's some that have extreme tolerance where they're just risk takers and it just doesn't phase them, right? They have a $1,000 account to start out with and they're going to go $1,000 into a single, meme stock and try and double or triple their account, and they're okay with that. Then there's people who they have a $1,000 account and they want to find a contract that's $48 and not a penny more.
Right.
And they're going to get into that trade and they're going to close it when it's up, 10%, 4 cents, 5 cents, right? Because they're, oh my God, this is so cool. I just made money. And they're going to close it out. So I think, especially if you want to be a day trader, like there's just risk involved with just being a day trader. I feel like there's a certain personality that's drawn to it. And maybe this is completely made up, I don't know, but in my mind, I've got this feeling that day traders are generally risk takers just in the nature of what we do. But then there's people that, they want to do this. I don't consider myself necessarily a risk taker, even though I'm a day trader. Like outside of trading, yeah, I'm a risk taker, but in trading itself, it's kind of weird because I feel like there are times where I can be aggressive and take risks, but I still don't feel like I'm taking on a big risk. I know that doesn't really make sense, but I'm aggressive, but there's a conservative approach to how I'm aggressive. It's just weird. Like I just feel like if you're a day trader, you're just drawn to the image of what day trading is, which is inherently, full of risk.
Yeah, that's true. A lot of people get into it, frankly, to gamble. That's the mindset, and I mean that could be a whole show on its own. I mean, there's definitely, I hear from a lot of members, Yeah, people DM me, and all you guys are welcome to. People DM me and ask me about these things and that things. It's not always trading related, and I kind of joke around saying I'm becoming everyone's bartender, which is great. But I'm hearing from, I've said publicly several times that I have adrenaline issues in my life, and it doesn't necessarily uh, spill over into trading, but it does sometimes. And when I feel that happening, I just pull back and trade a lot less because I'm aware of that's how I am. And I'm hearing from members out there definitely where they got into it for a gambling mentality. Maybe they have some of those adrenaline issues that we both have, but you successfully keep them out of your trading, where I have struggles with that. But now they want to switch over. They don't want to gamble anymore. They want to learn how to be a real trader. They want to learn how to be profitable. So that's an interesting part of this too. Some people begin that way and they realize that they see the potential and they want to change their ways. So that's something that's present in the community for sure that I've seen.
Yeah, I mean, as your trade style and experience advance, you're also like your mindset about trading is going to change also, right? So when you don't know what you're doing and you just made 20 bucks and you're super excited because all you did was, look at a screen, push the mouse button twice and you made 20 bucks, you're super excited. Later on, that's not going to excite you anymore because you want to see why did I make the 20 bucks and you're going to dig into it more. So I think as you have more of an understanding of how the market works and how to make money doing this, I think your whole mindset is going to change towards it also because you're in a different place, right? The first time you do anything, like it's super exciting and you don't really know what's going on. Once you have experience with it, I think your mindset just shifts to a different viewpoint of how I'm going to go about doing this.
Yeah. Okay. And yeah, and let me know. Do you want the screen?
Yeah, whenever you're ready, I've got some slides I'm going to show you guys as far as how to specifically position size. Now, this is just going to be an example. I picked a stock that kind of made sense for how I'm going to talk about things. Remember, it's just an example. Let me pull this up here. Give me a second to change the screens.
And I'll say too, I see you guys' questions. There's definitely questions coming in. I'm glad you guys came. There's a good number of people here. We'll definitely get to these questions. There's several already. We may miss some. I do apologize if that's the case, but we will definitely get to these questions. There is one who's asking, when we say a full-time trader, does that mean that if your primary source of income is trading? So I'll say with me, when I think of full-time trading, that's definitely one of the definitions. How do you define full-time trader, Mike? I think that's a great question.
That's pretty much it. This is, from bell to bell every day. This is what I do. This is what I rely on to pay my bills, fund my lifestyle, have fun in life. This, basically, what are you full-time anything, right? I'm a full-time realtor. Well, you go out and you sell properties and that's what you do for income. So as a full-time trader, my definition, I guess, would be someone that, if not their only source, their main source of income comes from trading.
Yeah, it's amazing. That's exactly right. He's an assassin. All of you full-time people at Black Box are. I'm the only part-time trading instructor / whatever I am. Somebody called me the entertainment director the other day.
It fits.
So yeah, I'm just an entertainer, etc., part-time trader. But yes, Mike is legit assassin. That is what they're doing to pay their bills. They're trading. I mean, that's what they do for money. It's amazing. So much love and respect, bro, for sure.
Thank you. But remember, I had many nights in the fetal position crying myself to sleep before I got here. So
yeah, you're not 6 months into your trading journey.
no.
Everyone, be aware of that. That's
right? You don't look at these professional sports guys and go, oh, wow, I wish I was them. And you just picked up a football, 3 months ago, right? They play the junior leagues, they play, high school, they play college before they make it to the pros. They've put in a ton of time. So you can't look at someone, that can hit home runs with ease and say, oh man, I wish I was them. Well, they put in their time to get to the point where they can hit home runs with ease. So
yeah.
We said this last time. I think the closing remarks last time was, if you're struggling, just stick with it, put in the work, especially position sizing, if you're struggling. to allow you to take some losses and not lose your ability to keep trading. But if you put in the time and if you have I'd say if you're following the right information, because there's a ton of information on YouTube, on Twitter, and some of it just isn't good. Some of it's just flat out wrong.
Yeah,
So
garbage.
if you follow the right type of information, align yourself with some good people, you can do this. But it does take effort and it does take time. And there are frustrating periods where you just think, oh man, I'm never going to get this. But if you stick through it, again, you've got to have money to trade. So position sizing will be key when you're in that period of not being able to make money. Take small losses, that's okay. You just can't take a big loss that destroys your account. But if
I
you
love
stick
your,
with it, it comes. It's like any other skill. You're not going to learn how to, operate a bulldozer just the first time you sit in the seat, right? It takes skill. You have to develop these.
I love the pro athlete analogy, because think of the NFL, so those guys get there and they do their thing, but how many injuries did they take along the way? How many doubt-filled nights did they have? So think about that in your trading journey from part-time to full-time, and you had injuries, so to speak, along the way, and like you said, you're in the fetal position several times. I mean, it just seems to me, from a part-time trader who works with a bunch of full-time traders, that it's not easy what you guys do. Trading is not an easy thing to do, but it gets
I'd
easier.
say if you haven't cried yourself to sleep as a trader yet, then you haven't been trading long enough.
So there you go, everyone. All right, anyway. So what do we got here? What am I looking at? This looks interesting.
All right, so first thing to make note, this is not a trade I'm recommending. I'm just using this chart and this options chain as an example, because I can talk about it all day long, but if you're trying to visualize what I'm saying, it's a lot harder. So I have a specific chart I'm going to look at. It's real based on the chart, but it's kind of a fake trade thesis as far as if this was something you wanted to take, this is how we're going to go about it. So key thing to remember, I am not recommending this as an actual trade setup. This is just an example of how you can look at a chart, come up with a trade thesis, and basically manage that trade. The other thing to keep in mind is that this is just an estimate. There are other factors that go into options prices that I'm not taking into consideration right now. So for those of you that are new to options, there are so many factors that go into how an option is priced. And I'm not going to go into it here because one, it's very complicated. Two, I don't even know all of it. And not that I don't know how it's done, it's just such a complicated mathematical formula that I've never looked into the details of how it's calculated, and I don't care. But what you do need to know, if you don't want to go into the mathematical part, is that there are multiple factors that go into what makes an options contract what it actually costs. Okay, so today, in this example, we're not taking into consideration theta, which is time decay, which means every second you're in an options contract, it's losing a little bit of value because it's getting closer and closer to expiration. Even if it's going in your direction, you're in a call and the underlying is going up, a little piece of that contract is losing value just because of the time factor. So we're not taking into consideration IV. So again, the example I'm giving you today, you can use this as an estimate of what your contracts are going to do and how you would position size based on that, but it's not going to be an exact, okay, it did this, so the contract's going to be worth this. You've got to take in those other factors that we're not going to talk about today. Okay, so when you're thinking about a chart and I want to get in here, this is my trade thesis. What I'm going to show you guys today is an estimate of how you would go about sizing that position based on the chart. So here's our fake trade thesis, and I say fake because it's not my actual thesis right now, but this is a live chart. Okay, so we're looking at MU. This is the daily chart for MU. You can see right over here at this point, this was a resistance point. It hit that level and dropped. Okay, we did get over it here, we did get under it here, but this is what I'm looking at Friday. It hit that level and then bounced. So this prior resistance level on Friday actually became support. Now, it wasn't an exact touch and go, but it's very close to that area. So you can see prior resistance became support. So, and you can see these 2 days in here, it was pretty close also. It did breach that level, but we can basically say that level held. So that's $89. The actual level on the chart, I think it's pretty hard for you guys to read. It says over here, it's 89.05. So to make the example really simple, we're just going to make the numbers easy. We're not going to say 89.05. We're going to call it $89. Okay, so $89 support because it was resistance here and it became support, support, support. So our trade thesis is we want to be in calls for MU if it's above this $89 support. Now, if we look at Friday's chart, this is a 1-minute chart for Friday, you can see what it did at that $89 level. Okay, so it bounced, it breached it, but it basically held, it bounced again, and then it went on a little bit of a run upwards. So you can see Friday, it held that $89 level. So ideally, you would have wanted to get into a position here if you were swing trading and if we were in a swing environment, which I don't believe we currently are. My personal thoughts, maybe we are, maybe we're not. For me personally, I don't want to swing too much right now. I'm short-term trading most everything I touch. So this is what happened Friday. Remember, our thesis is we want to be in calls if it's above this $89 support. It hit that level and it's above that. So our thesis right now is tomorrow we're going to open call position for MU. Now, it closed Friday at 90.83. Okay, let's just say that tomorrow MU opens at the same price. And again, we're going to round up to make the numbers easy. So let's just say tomorrow MU opens at $91. Now, it could open at 101, it could open at 61. I have absolutely no idea. So again, I'm not saying it's going to do this. We're just using an example. Okay, so our assumption is that it's going to open at $91, which is basically right where it closed Friday. Our assumption is that we're going to buy calls based on that prior support of $89 holding. And for this example, we're going to say our maximum trade risk is $500. So any trade I enter, I'm willing to lose $500 before I say, you know what, I've got to cut this trade. So without picking an arbitrary place on the chart and say, I'm going to get this contract here and I'm going to buy 10 of them, and maybe it drops 5 cents and then 10 cents and you're freaking out going, oh my God, it's immediately working against me. If you know your max trade risk is $500, how many contracts can we buy for that $91 call for MU? Now, if you look at the bottom here, it says the bid and ask on Friday's prices. Okay, so this options chain is Friday. So these contracts right here, the bid 226, the ask 236, that's not where these contracts are going to open tomorrow. Okay, so again, we're just using an actual chart and an actual options chain to make it easier to visualize. These are not going to be the prices where it opens tomorrow, but we've got to use something so it's easier to see rather than just visualize. Okay, so if our maximum trade risk is $500, how many contracts can you buy for that $91 strike with proper trade management? Now there's kind of a hint on the screen there. If you guys are going, oh my God, I have no idea, well, you're in luck because I'm going to show you. Okay, so the trade thesis, again, MU, calls above that $89 support. If your trade thesis is to buy the calls based on the prior support of $89 holding, where's your trade invalidated? I'm not reading the question box. So Riv, if you can look at that, does anyone know if your trade idea is to buy calls above $89, as long as that support holds, where's the trade invalidated? Who's got answers in that question box there?
We got several people saying below 89.
Okay. So your thesis is that the support of $89 is holding. So if MU were to reverse and break back below 89, that's the support area we're watching. So if it breaks below 89, that's where our thesis is invalidated. So we're going to cut that trade for a loss if it breaks below 89. So there's the fun part at the bottom. Now let's calculate position size for this risk management. So How much room does the underlying ticker have before it would reach that support if it were to reverse? Now remember, we're just making up this number, but tomorrow, if it were to open at $91 and support is at $89, we've got that potential $2 drop. If it was going to drop and test that support area again, we don't know if it will, but we know that that $89 is a pretty solid support area. Okay, so our thesis says if that area holds, we want to be in a call position. So we have to understand that it can potentially drop from 91 to 89, and that's a risk that we're going to take if we were to open a position, if it opened tomorrow at $91. So what we need to do to figure this out is we're going to look at the delta of the contract that we're going to buy. Now, since the contract, or since the underlying is opening at 91, again, I'm just randomly picking an example, we're going to use a $91 call. And in this example, I'm just using the weekly contract. Just again, this works on any time frame and any trade type. You just have to use the formula that we're using now and put it on a different time frame. You can use this on 2 weeks out, a month out, a year out, whatever it is. So I'm just using the weeklies as an example, but you can do this for if you wanted to take the March contract. So this is the $91 call right here. For MU, $91, there's the expiration February 25. So we want to look at the delta. The delta on this is 46 cents. So that means for every dollar that the underlying drops, so MU, the ticker itself, goes from 91 to 90, this particular contract will drop 46 cents. Okay, so the ask is 236. Remember, those are Friday's prices. We don't know what it would be tomorrow at open, but we have to use a number. So we're going to use Friday's price, 236. So if MU opened at $91 and dropped, actually it's 90.8. So it's not exactly, again, remember, we're rounding up. So if MU were to drop $1, this contract would drop by $46. So it's 236 now on Friday. Based on the delta, if MU drops $1, we would lose 46 cents. So this contract would be worth $1.90. Okay, that's what delta is basically referring to. If the underlying drops $1, the delta is how much this contract will lose. Or if the underlying goes up $1, the delta is how much this contract will gain. So going back to the example, if the underlying was to drop $2 back down to test that support area again, that $91 call contract would lose $92, right? So your delta is 46. That's per dollar of the underlying move. So if the underlying is going to move $2, you're going to times that delta by 2. So 46 times 2 is 92. Hopefully I'm not losing you guys, because this is something you kind of have to just wrap your head around, and it's probably confusing at first, especially if you don't know what the Greeks are. You're going, delta, what is delta? Right? This is something we just kind of take for granted as options traders. So we can look at this and kind of formulate this idea in our head instantly. If you're new to this and this way of thinking, you're going, oh my God. So this will be available on YouTube. You can kind of go back and watch this over and over. So delta is the amount the contract will move for $1 move in the underlying. We're saying MU opens at 91. It can potentially move down to $89 of support. That's a $2 move. Take your delta of 46, times that by 2. This contract, if you have a single contract, will drop $92 if MU opens at 91 and drops to 89 to test that support. So if your max loss is $500, you can't buy more than 5 contracts. Because if you do enter at 91, and if it does drop to $89, with that $2 downward move to test support and a position size of 5 contracts, your loss would be $460. Now your max loss is $500, this loss would be $460, so there's a little bit of wiggle room, but that can also take into account your IV moving or theta or whatever else. So you have a little bit of a buffer there. But if you bought 6 contracts, if it drops down to that support level, your loss is 552, and your max loss you're stating is 500. So you can't risk it moving 552 if your max loss is 500. So you have to take a 5 contract position size here. Because remember, what we're doing is seeing if we enter at 91 and if it drops to 89 as support, that's how much we're going to lose. If support doesn't hold and it breaks below support, that's where you're going to exit, right? So this 460 that I'm mentioning here for 5 contracts, that's if it hits that support level, but you're not going to close the trade there. You're going to close the trade if it breaks that support level. So your 460 is actually going to be a little bit more. Does that make sense so far?
Yeah, let me jump in too and say what you're saying with the 5 contract, that is assuming an extremely disciplined exit discipline, right? Because that's getting out when it breaks your pre-planned 89. That's not holding on waiting for VWAP. That's not holding on to see if it's going to reverse. That's an extremely big part of this, is you're assuming this. And a point that we all need to take into consideration is that means, okay, the trade is invalidated at 89. 7-star Mike is going to kill it right below 89. The exit,
right, but remember, our trade thesis is to get in because 89 held. It wasn't to get in because VWAP is here or the 34 is here. It's we got in because 89 is holding as support. So we're going to exit if 89 breaks.
Not going to question it. That's the plan. If 89 breaks, we're out.
Now, here's the thing. I will say this also. In the support and resistance video I did, I'm giving you guys levels, right? Support and resistance isn't always a specific number. So in this example, so what you just brought up, let's say 89 breaks as support and you have VWAP at, what am I saying? So 89 is support, and let's say VWAP is 88.77, right? In that case, yes, I'm going to give it down to VWAP, but I'm not going to say, because 89 won't hold as an exact number. It might be 88.80, 88.93 before it bounces, right? It doesn't have to be that exact level. So if VWAP was right below that for the day that we're looking at, yeah, I might say, well, let me see if it bounces off VWAP, but it has to be very close.
Right.
So if we're looking at 89 as a support level and VWAP is, let's say it gaps up or something and VWAP is $3 lower than that, no, I'm not giving it that $3 move to see, well, it broke support, but VWAP is $3 lower. Well, it broke VWAP, but the 34 EMA is $6 below that. Well, it broke that, but there's another major level of support below that. You can't keep lowering it.
That's right. That's the problem. And a lot of people calculate their max risk by simply the premium they're paying. That's a common thing I'm hearing too. And
I love that you mentioned that, because my very next slide.
Yeah.
Why can't you use a set percentage as a stop loss? I hate when people say this. They say, oh, I stop out at 20%. And my first question is why? What does 20% represent? It represents nothing. The market doesn't know or care about what 20% means to you. That's a random number that you chose. It has no market significance whatsoever. Now, when you're starting out as a trader, you can say, hey, when I make a 10% gain, I want to sell it. I just want that feel good profit. I want to know I can get into a trade, profit, and cut it. That's fine. But as you get experience and you move into, if you want to do this full time, you can't take these set levels as gains or losses. So in this case, at the ask of 236, 5 contracts is going to cost you 1180. If the underlying dropped to test support, that would be a loss of 460 bucks, right? But we're saying our max loss is 500. So if it does drop to support and we're down 460, this is still a trade that we're going to be in. However, that $460 loss is 39% of the position. So if you have a 30% stop loss, you're going to stop out right before it hits support and then bounces.
Yep.
Now remember, if it does drop that much, it is still a valid trade, because you're saying if it holds support, I want to be in calls. So if it drops all the way down to support, you don't close the trade. You're still in a valid trade. You're down 39%, but you're still in a valid trade. So you wouldn't close the trade just because it dropped there. You're only closing if it breaks that level and doesn't hold support this time around. So if you're in this position and you're down 39%, you're in a valid trade based on the thesis that you set to start. So if you just say, well, I'm going to cut it at 30%, you cut it at 30%, it drops just a little bit more and then bounces and reverses. And how many times has that happened to you guys? Have you ever cut a trade and then, 6 minutes later it reverses and you're going, oh my God, I just cut that trade and then it reversed?
Yeah.
That happens to a lot of us, right?
Yeah, it's the feeling that the market hates you. Like the market was waiting for you to go long, and now the market's going to bleed out just because it hates you personally.
Right. But what did you really do? You sold a call contract right before it had a chance to hit support and bounce and reverse. So when you take these general, oh, I want, and we do it all the time with the $100 chuck, right? The contract is up $1, we're going to close it. We do that. It's not the best way to trade because that $100 is an arbitrary number. The market doesn't know what you got in at, so it doesn't know what $1 up from there would be. That's not how people buy and sell contracts. That's how amateurs do it.
Yep.
And like I said, we $100 chuck from time to time also. So I'm not trying to put down people that $100 chuck. I do it, right? But for most of my trading, I'm not going to sell it based on an arbitrary number of $100 gain. I'm going to close it. Up 20%, I'm going to close it. Down 25%, I'm going to close it. You can't do that because the market doesn't know what these levels are because it doesn't know what level you entered at. And it doesn't respond to that. It just doesn't care, right? So what you don't want to do is have a 30% loss. Remember, this is $89 support. We're getting in up here at 91. What you don't want to do is have it come up here and you're going, oh, sweet, I got a good entry. It comes back to test this level. Remember, this would be with 5 contracts. And the example that we chose, this level right here, you're down 39%. So let's say it gets to this candle, you're down 30%. You cut the trade, it hits support, it bounces, little retrace and goes on a run. And you're out here going, oh my God, I was in that trade. It would have done exactly what I wanted it to do. Well, what happened? You cut it at 30%, but the support level that it was bouncing at would have needed a 39% drop in those particular contracts, right? So if you're cutting at 30%, that's an arbitrary number. No one knows or cares what 30% means. If you cut it based on the chart, this support level held, I'm staying in the trade. This support level broke, I'm closing the trade. Whatever that percentage gain or loss is right there, it doesn't matter. It's the fact that this is a support level. We're in the trade because it's holding support. We close the trade if it breaks support. So you don't want to close it somewhere up here for a 30% arbitrary number of a loss and then watch it touch support and then bounce and run.
Yeah, I see you all the time putting forth this advice. People ask you many times each day, when should I sell? What's the thing? And you're always saying support and resistance. Like that's the key to all this. And I know that a lot of people simply calculate their. I did this in the early days myself. How much are you comfortable losing with this trade? Okay, so I can lose whatever, 15%. So that's their stop loss, and that is completely disattached from any notion of support or resistance in the chart. So that's one of the great things you're bringing to this.
But think about why, right? You and I are going to enter the exact same trade.
Yep.
We see the chart. We say, okay, and let's just use these numbers as an example because we've been talking about them. They're fresh in our mind. If this stock bounces off $89, I'm going to enter a call position.
Yeah.
You see it bounce off 89, you get into a call position, your contract costs $3. I'm eating a bagel. I come back to my screen, I say, oh wow, look, it bounced off of 89. I'm going to enter a call position. By the time I enter the position, it's $3.40. If we just say, I'm going to cut this trade at 15%, well, you're in at $3, I'm in at $3.40. 15% is 2 completely different numbers for both of us, and we're in the exact same trade for the exact same reason.
That's right. That's right.
So it doesn't make sense to say 15% because where did you enter? How does that 15% compare to the chart of support and resistance? If that 15% is nowhere near support, you don't want to cut a call while it's above support. So if you're just randomly using that 15% level, And again, I'm just making these numbers up, but whatever it is, I have a 30% stop loss. I have a 50% stop loss. I know the Nigerians say all the time, if their position hits 50% down, they cut it. No questions asked. Down 50%, they cut it.
Yep.
But what if you're down 50%, but a major support level is 2% below that, right? So you've got to look at a chart and see where does it make sense on the chart to close out this trade. And if it doesn't hit that level, I'm not closing the trade.
Yeah, that's
I'm
right.
not closing it because I'm down $500. I'm closing it because it hit support and it didn't hold and support broke. It's a broken trade. I am out of the trade. I sized the trade such that it would be about $500 when it hits there. So I'm not closing the trade because it's down $500. I sized the trade such that if the trade is broken, it would end up being about $500. So it's not the $500 that's getting me out of the trade, it's the chart. And
That's
I'm
right.
position sizing the trade such that if it breaks, it would be $500 if that's your max loss. Remember that I'm just using that number as well. You might look at your account and say, hey, I can't afford to lose a $500 on any single trade. So again, I'm just picking an example here. If your max loss was $100, you would take 2 contracts, I think. I'd have to go back and no, you would take 1 contract because that $2 of a drop represents $96. So if your max loss was $100, you can only take 1 contract to allow it enough room to go back to support and see if it holds. And if it does hold, then you stay in the trade. If it doesn't hold, you've got to cut it because you're down $96 now at support. So if support breaks, maybe you're down 100, 105, 110, and your max loss is 100, so you're right about there, and that's where you would cut the trade.
Yeah, here's a good point too. Everything that is in the chart is objective, like it's outside of our brain. And things like the Nigerians 50%, which I don't know if I believe that because they know charts. I wonder, it just makes me wonder, are they really cutting everything at 50% regardless? Anyway, but set stop loss percentages or amounts I'm comfortable losing, those are all subjective. And like you said, the market doesn't care about our subjectivity. So what you're saying is the objective reason to enter, to exit, to add to pull back is in the chart. And that's a great.
If you're not watching the chart, you're guessing.
That's right.
Now, this is for technical analysis, right? You can have a fundamental reason to get into a trade. And you say, hey, they beat earnings by 10%. They're guiding up by 10%. The stock should be up 10%. So I'm going to enter a trade here. And I think the stock is going to increase in value by 10% over the next 3 months, 6 months, whatever. You're not going to close that trade based on the chart because you're using fundamentals to enter that trade. Yeah. So as a technical analysis trader, I'm trading based on the chart. So I've got to use the chart as my guide for enters and exits. If I'm trading on fundamentals, which I don't do. I couldn't tell you the first thing about fundamentals because I don't trade that way. I understand them. I know what it is. I just don't trade that way. So that's a different mindset. That's a different, let's just say trade mentality. It's a different criteria for entries. So for what we do for the most part, if you're talking about the chat room, and if you look at what I post on Twitter, it's technical analysis entries. So based on a technical analysis type of trader, the chart guides you. You're entering and exiting based on points on a chart, which represents supply and demand.
Yeah, our good friend Kang recently tweeted, he lives and dies by the chart. And that can't be repeated more often for TA-based trades. And of course, another type of tradings that people have mentioned, of course, when the days of flow trading is rosier. You've said many times when we're in a swing environment and the flow is where it should be, the big money is deploying the money with regularity. You've said that TA is not a part of that type of trading for you personally. So yeah, that's a great point. This is all for TA focused trades for sure.
So for flow trading, again, we have people that will look at a flow trade and say, I like the trade. If it gets to this point on the chart, that's where I'm going to buy it. Yeah. So you can combine flow and technical analysis. Yep. I don't personally enter trades like that. If it's a flow trade that I'm entering, the flow itself gets me into the trade. And I know Charlie trades that way, Mario trades that way. It's not all flow, but when we see the right type of flow, we're entering that trade because a smart money manager is opening their position right there.
Yeah, they've already done the TA. They've already
Those
done it.
smart money managers don't enter based on technical analysis, right? They might have a technical analysis person on the team, but they're not taking a trade thesis based on just a chart. They have multiple things they're looking at. So for me, I don't look at a chart to get into a trade based on flow. Some people do. Once I'm in the trade, I'm going to plot support and resistance and see how I manage my exit.
Yeah, sure. Yeah, that's, remember the top tier flow as far as the entries. It's like you guys were just, I remember watching you and Charlie and others just going in. Oh, look, some top tier flow came across. In often you guys were in like where the well was, or even like a little bit below. It was like immediate entries, and I remember many of those were just I mean, the majority of those were profitable. So it's an amazing thing. I hope those flow days come back. Is all I got to say. Hope
They
they're
will. They will for sure. We just have to get through and think about why we're not seeing them right now. Right? Do you want to be in a long-term options position where for 3 weeks it's just going to go up and down, up and down, up and down? Like that's just eroding their premium.
That's right. That's right.
If you have a one contract and you're like, well, you know, I have a $50,000 account and this is a $300 contract, right? You don't care if it goes up and down. You might just say, hey, I want this position right here. I'm willing to take the risk. But you're not going to put on a $6 million position where there's a potential for 3 or 4 weeks of just chop. And we don't know the time frame, of course, but we know we're in a position right now where the markets are just choppy. So it makes sense that they're not going to expose these huge options positions. And then Pete actually also talked about this with the IV as high as it is, they're going to sell premium instead of buying.
That's right.
And then when that drains out, they're going to shift into buying. So there's multiple reasons why we're not seeing the type of flow we want to see right now. But if you step back and look at the big picture, it all makes sense. So the flow will come back, right? These guys, this is how they trade. They put their money into these big positions, they let it make money, and they return that profit to their clients. That's what they do. They're not just going to stop trading all of a sudden. So the flow will come back. We just have to get through this chop period.
Well, it's choppy. There's no doubt about that. I don't even like to buy 2 contracts more than 5 minutes at this point. It seems like sometimes, but again, that's me. I'm kind of the cautious rabbit. I don't IV. I don't want to jump ahead or anything, but IV is an important part of all this, isn't it? Is that?
It is,
How can
as far as buying the contracts with these big money positions, right? Because there's a point where the IV is so high that they want to sell, like they want to write premium while the IV is high. And then as the IV drains out, they're going to shift into a buying position. So from one strategy to another.
Yeah. So they're never just sitting there, going all cash waiting, like you said. If they're not doing huge, call flows not coming through, they're like you said, they're selling or they're doing other things. They're making money somehow. I'm convinced of that.
It's what they do best.
Oh, man. All right. So IV. Oh, we can talk about IV with ER for sure. I know that.
I do have a trade submitted from a member that talks about that.
I've got one question for you here that someone 2 questions really. One, does sentiment, like if sentiment changes once you're in a trade, will that affect your basically where you kill the trade? Like if some negative sentiment really comes through, like how do you account for market sentiment if it changes while you are in a trade?
There's market sentiment means you have feelings, and if you have feelings, you're a human being. If you want to be a trader, you have to trade mechanically.
Now we know you're a very caring man, Mike. You are a very.
I am, but I have to take my trader hat off.
That's right.
When my trader hat. So let's look at this example right here, right? So we're in a position because $89 is holding as support. And we're way up here. We got in down here. We're way up here.
Oh, yeah.
Let's say even better. We're way up here now. We're in profit. And let's just say a bad article comes out about MU.
No.
Now, there's 2 ways you can go about this. As a scalper and a day trader, I'm going to probably lock in profits because that's the short-term trade style. If you're trading based on this chart and based on the quote-unquote fake thesis that we put out for entering this trade, it can go all the way back down here and you're still in a valid trade. So a negative article coming out, if the reason I don't pay attention to news is because let's say a negative article comes out, but the chart doesn't reverse and go down, right? So you're looking at this saying, oh my God, that's negative. And it happens with Boeing all the time. Bad news comes out for Boeing and the stock just goes up.
That's a great example.
Right? So I don't really pay attention to sentiment that way, whereas like, oh, there's a negative headline, I've got to close the position.
Right.
Now I'm still going to close on support and resistance. Now, if we got in here at $89 and we're up here at 96 or 98, I'm not letting the trade go back and test $89 at that point.
Yeah.
So these candles here, the lighter color candles, these aren't the chart. This is a feature that TradingView has as like a prediction tool. And it's not a prediction, it's you pointing out where you want the chart to go. So these candles did not happen. If anyone's looking at this going, my chart doesn't look like that. So let's say we got in here, we come up here, we test support, we bounce off support. So we're not closing the position, right? And then we climb up above here. Well, you might use this level here as your new stop loss. And you can see it bounces off there.
Yeah.
Now this is completely made up, these candles here. I just randomly placed them. So it just happens to look like that. So if we get above this level here, you might say, hey, if it breaks below this high, that's where I'm gonna cut it. So this day, you see it spikes up and comes back down and closes below it. So you might close your trade up here. So just because we're up here and a negative headline comes out, it doesn't mean I'm gonna say, well, the chart's broken if it's down at 89. No, because now we're up at $98. I'm not letting it go from 98 to 89. So my stop loss is moving up.
Yeah, right. So,
but again, that's using the chart for support and resistance.
The news will or won't show up in the chart. So you just watch the chart, right, and you can just take one thing off of your radar. That makes perfect sense. Do you remember a few months ago when Swan, I don't remember what ticker, but he had a trade going up and he like live tweeted him scaling out of it? Do you remember that? And it was amazing. It was like an amazing.
I do indeed. And Swan is, and if you guys don't watch his watch list in the morning, like Swan is absolute badass for sure. So there was a day where he was basically watching the chart and tweeting out, okay, it hit this level, so my stop loss is now here. Okay, it kept going up, so my stop loss is now here. And Swan is amazing at that. So that's how you do it, right? You're protecting profit. So you're not letting it go all the way back to your entry before you cut it.
That was a beautiful moment. That was a masterclass. And it was Disney. It was Disney, that trade was. And tell you what, that was something to behold, Mr. Swan. Sorry, just had to shout that out because I remember that as an exact example of what you're talking about. Raising the stop loss, you know, securing profits. Don't just sit there with hopium as it descends into your you know, 89 and then 88. So that's how you guys are full-time, you know, people who are killing it. And anyway, I remember that. Swan in the house. Yes, watch his seminar 3 days a week, every 3 days. Do it.
Yeah, so if you want to go into user submitted trades, you can take the screen back.
Yeah.
So
yeah.
Last thing I want to say about this is your position sizing is going to be important because again, we've seen trades go up 80% and then people say they took a loss on the trade. And or not position sizing, sorry, trade management. Okay, so whatever system you use to get into trades, you need trade management. Whether it's support and resistance, whether it's a fundamental idea, whether it's whatever, you need trade management. So that first portion of today was basically how to use the delta and your position on the chart to say, this is support. If it goes down to this level, that means I'm willing to accept, in this example we used today, a $2 moved against me and the trade is still valid. Take your delta times 2 to represent that $2 move. That's how much the contract is going to move if it goes against you. Multiply that times, you know, what your actual accepted max loss is, and that's how many contracts you're going to take. So you don't want to look at that trade and say it's opening at 91, it's going to go down to maybe 89 to test the support. I'll do 20 contracts. Next 20 contracts might be, you know, a 30-cent move on the chart and you're stopped out at $500 loss, right? So you got to look at the chart, use that delta as an estimate of if it moves this much, these contracts are going to be down this much. I only want to lose X dollars, take your X dollar max loss, take your delta, and kind of figure out what position size you can allow the chart to move to and still not stop you out.
Yeah, and if there were some questions about delta, and some people were asking about theta too. Like if you're new to delta, like at the money is generally around 0.5, and 0.5, I mean, it does move quicker than like a 0.3, but 0.5 is easier to mathematically, calculate on the fly, just because like Mike was saying, if the underlying goes up $1, the options will go up 0.5 of that, right? Half of that, so 50 cents. And of course,
And
that's
regarding theta, remember the second slide I had here said there are other factors to take into consideration. So yes, this does not include theta. So if that move from 90, or what do we talk? The move from 91 to 89, if that happens today, the contracts are going to be priced differently than if it goes from 91 to 89 in 2 weeks. Right, so there are other factors that go into this. So like I said, this is an estimate. It's not an exact number. The theta will change that equation. The IV will change that equation. But if you want an estimate of, it's a potential $2 move to support, so I'm going to use the delta as an estimate of how much those contracts are going to drop. Yes, theta and IV will change that as well. So again, this is a way you can visualize the chart and how much you're going to lose per contract as an estimate to judge your position size, but it won't be an exact, if this contract, or if this underlying moves $1, I'm going to have this much profit or loss based on the delta. No, there's more that goes into the pricing. But unless you're going to do an extremely complex mathematical formula in milliseconds while the chart is moving, this is how you would figure out position sizing based on what you're willing to lose per trade.
Yeah, someone definitely asked, isn't theta what affects how much an options drop? So think of it as delta is definitely going to focus on how sensitive the options price is relative to the underlying ticker moving. Like he was just saying, MU is $90, then the price is $95. Delta shows you the sensitivity to that, where theta is the sensitivity. It's a set amount that the option is going to lose over a period of time. So the delta is definitely the one that is attached to the underlying movement of stock price. So that's one easy way I've kind of learned to keep those separate over the day. And it's a lot to it. Is also another takeaway. Options are not the simplest financial instruments you can trade in. is the truth.
Yeah, before the seminar started, we were talking about options versus commons, right? So if you guys are trading common shares and you move to options, it's not the same thing. It's based on the same thing, right? If you're looking at a ticker that's $100 and the chart that you look at says, well, the next resistance is 105. I'm going to buy common shares at $100 and maybe sell at 105. Well, you're going to buy a call position at 100 and sell at 105 also. So the underlying principle of what we're doing is the same. Options versus commons is a completely different beast, though. I know people who are great common share traders. They try options and they blow up their accounts. Right? There's a lot of things you have to understand. The main thing that pissed me off when I started trading options is a stock's $100. It goes to $95. Then it goes back to $100. Great, I didn't lose any money. Well, as an options trader, the stock is 100, goes to 95, then back to 100. Your options contracts did lose money. Even though it's the same price, the options contracts lost money. And before I really grasped why it's doing that, I was getting pissed every day. I was like, what? It's the same price as when I bought it. Why are these contracts down? Well, that's because I didn't understand what options actually are. So, and this is, again, talking about IV and ER. If you're holding options through an ER, that tells me you don't understand how options work. Now, maybe you do and you say, hey, I'm willing to take on this risk, and that's fine. But a lot of people that say, oh, I think, after ER, this is going to jump $10 or it's going to be a positive ER. I'm going to buy calls today and then sell them tomorrow for profits. That tells me those people don't understand what options are.
Yeah, that's true.
Okay, there's an IV factor that's going to work against you. Even if the stock does go from 1 to 105, your call contracts might be lower. And they don't understand how that's even possible. Again, so there's more than just delta. I'm using that as an example here. There's a lot that goes into options pricing. and theta is one. Yes, IV is another. There's more to this. It's complex. So going from common shares to options, it's the same principle, but you really do have to learn a lot more intricacies with how options move.
Yeah, understanding, yeah, so options has amazing leverage that can really return explosive gains, and you have an additional benefit of having a clearly defined risk. Like if you're just buying a single leg option, you can't lose more than the premium that you choose to pay. So those are amazing things, but I think part of having access to that leverage and the defined risk, there is an expectation, really a requirement, that we have to put in the work to learn about these things you're talking about and put in the time to understand what these things are that we are getting into. And by the way, there's a couple questions like, what is ER? What do you mean by IV and ER? Don't you have an ER submitted trade? Do you want to do that one first, since we've got some questions about that right now? Or
We might as well. We can jump into it. It's a pretty simple example. It's not really going to explain it the best, but hold on. Keep the screen for a second. Let me pull up. I've got a lot on my screens right now. Let me get out of this and pull up the example so we can get into it. Let me find where it is.
Yeah, just let me know when you want the screen. But let me just say too, there's definitely some people asking, what is ER? What do you mean by this? Those are great questions. Those are things you need to know about as an options trader. So yeah, we'll definitely, Mike will go through an ER trade. And yeah, great question, because people gamble on ER all the time, and there's some things that you really need to understand about not just what ER is, but what certain things relevant to options contracts can really surprise you in a bad way.
Okay, pass the screen back, I'm ready. So ER is earnings. Okay, we're talking about earnings when a company reports their earnings numbers.
Yeah, earnings. That's right.
Yeah, so on the screen, this is Walmart, and this was a submitted trade to us. Someone took a Walmart contract for 17 cents before ER, and they were thinking, well, if Walmart jumps, these 17-cent contracts, they're cheapies, right? They're lotto cheapies. 17 cents. Hey, if this doubles or triples, cool, that was a fun trade. So here's the chart for Walmart, and I believe I've got it set up. This big green candle here would be the ER candle, right? So we're moving along, right? Right here, boom, the day before ER, I'm gonna buy these cheap 17-cent contracts, and if Walmart moves a few bucks, those 17-cent contracts are gonna pay off huge. And here's what Walmart did. Walmart closed before ER at 133.54, and the next day it hit a high of 135.69. So 133 to 130. So let's just say it was a $2 move. Okay, so a $2 move in the underlying is pretty good move. You can see if you look at these candles for Walmart, Walmart's not moving that much on any given day. So this big $2 move right here, that's a big move. Relative to all these other candles, that is a big candle right there for Walmart, right? So you would expect, well, I'm in these call contracts and it just made this huge move relative to what it's been doing. These call contracts are going to be worth a fortune.
Yep.
Well, look down here at the implied volatility.
Nope, I don't want to.
This big green candle up and this big drop in implied volatility. So anyway, before I get into that, the contracts went from 17 cents right over here to a penny.
Nothing.
Now, this is the chart of the actual options contract that this person bought. Okay, let's take a look at this real carefully. This is the option, or this is the ER announcement right here, this huge red candle on this options contract chart. That's the ER. Look at this contract pricing, right? It's just stable, 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 stable. This is 21 cents here. After ER, it literally goes to 1 penny. This is a big drop in the options contract, but if we go back to the underlying chart, the chart went straight up. and those contracts went from 20 cents to a penny and those are call contracts. So the calls went from 20 cents to worthless when the underlying is moving in the right direction. And that's because of this IV drop. You look down here at implied volatility, it's way up here. Boom. Once ER comes out, this big drop right here is instant.
Mm-hmm.
So IV is implied volatility. And what it's measuring, you can look at it like it's a measure of risk, we'll say. Okay, so it's kind of accounting for the unknown. And with ER or any binary events, sometimes these pharmaceutical companies will have a pending drug approval, right? That's a binary event. It gets approved or it doesn't. And depending on what happens, it's going to spike or drop. ER, they report well or they don't. It's going to spike or drop. Since there's confusion and we don't know the future, the market makers are going to account for that information that they don't know. There's risk there. So if you normally look at an options contract, and let's just say, let's keep the numbers easy, it's normally about $1 for those contracts that you would regularly buy. The day before ER, those same dollar contracts are going to cost you $2.20. Okay, I'm making the numbers up. It's not an actual formula. There is a formula. I'm sure I'm just for example purposes, I'm making the numbers up. So you would normally buy this contract, it's about $1. The day before ER, it's $2.20. That extra $1.20 accounts for the unknown for ER. So it's added into the cost of the contract to account for the move that the underlying might take. So it's basically adding premium just to account for the risk of not knowing what this ticker is going to do. Once ER comes out, we know what the ticker is going to do. Right, not ahead of time. I'm not saying we see the future, but they announced ER, the stock chart is moving. There's no uncertainty anymore because we're watching what's actually happening. So that extra $1.20 that you paid for that contract to account for the risk, now that comes out of the contract for no reason other than the risk is now not unknown. It's now a known event. We saw what happened. So the amount extra that you paid for that contract to account for risk, now that comes back out. So if the underlying is $100 and you bought a call contract and the underlying goes from $100 to $105, overnight you're going, yes, sweet, it's moving in my direction. It's going to gap up $5. Your call contract can still lose money even though it went in the right direction. And that's because of this. If you look at this chart here, the IV just gets sucked immediately out of those contracts. So that extra amount that you're paying to account for the unknown, once that unknown becomes known, that extra amount that you're paying for those contracts immediately gets pulled back out of those contracts. So if you bought the contract with that extra amount added into it, once that unknown becomes known, that extra amount that you paid gets removed. The underlying now has to move a lot more in the right direction to overcome that extra amount that you paid for risk. Yeah. And I'm probably not explaining that the best way, but that's, in a nutshell, that's what it is. So you're paying extra for contracts due to the unknown of the situation.
Yeah, I think that's a great way to put it. Like I always think of implied volatility. It's like the expected volatility. Like, so, okay, so the earnings report will come out and then there's an expected amount of volatility. But then once it's out and the underlying makes its move, there's nothing to expect. It is what it is. And what you just said makes perfect sense. The IV drain happens and you got to have an extremely big move to compensate for that. And as a result, is it still true that you never play any you never play any ER bets, basically? Is that still true in your case?
So I will trade before ER. Let's say we're a month out. And now, right now, I'm not really doing this because, again, we're in a choppy market. So my trade style is geared towards get in, grab that money, and get out. Right? Grab my piece of the pie and run. Go off and eat that pie and enjoy it, and don't worry about how much of a bigger slice I could have had. So right now, my strategy is a little different. Prior to this chop zone, a month out, 3 weeks out, whatever the case would be, if we're looking at something, for ER, And when I post on Twitter, the flow, I forget the ticker that I just posted one last week. I specifically said in the comments, ER run up, right? So what we might do is buy contracts 3 weeks, 4 weeks out, and heading into the ER, we expect the ticker to run, right? So we're going to capture that upward movement in the contracts, but also the IV is going to expand as we get closer and closer. So that IV is building. So that's also going to increase the value of the contracts. And then I'm selling it before the ER. I will not hold through ER. As a trade style, I just don't do that. I don't care if a ticker jumps 400 points overnight. I am not FOMOing that. I don't feel like, oh man, I should have been in there. I just don't do that.
So
here's an exception, because I don't want someone to say, oh, well, you actually held something through ER. You said you never do that. Here would be an exception. And I think I did this once last year. So when I say exception, extremely rare. Actually, it happened, I think, if I remember correctly, by mistake. I didn't know an ER was coming up. So I actually held something through ER. But the exception was that contract, it was a single contract, and it was down something like 85%. At that point, I was like, I don't care about the 15% that's left. So it's either tomorrow going to zero, which it was already down 85. So if it goes to zero, I already wrote that off in my mind as 100% loss. So if it went to zero, it just didn't care, because in my mind, it was already worthless. If it happened to jump, great. I'm down 85%. Maybe I can close it for down only 50%, or maybe it goes green. Who knows? But the only way I would hold something through ER, and like I said, I did it once last year, was it's down so much that I just don't care if the remaining amount goes to zero.
How did that work out? Did it profit? Or
it went to zero?
You lost.
But remember, it's not something too often where I'm going to hold something to the point where it does get down 85% in the first place. Okay, so that was one of those cases where, and actually, I don't want to say the ticker's name because I know you're in it also.
I don't, listen. So anyway,
there's exceptions to where I'm so far, like, okay, I'll say the ticker. I'm in Oatly. This was a flow trade. It's Oatly. Not a good flow trade. It's almost worthless.
Oatly is
I don't know when they report, but I think it's coming up in early March.
Yeah, it is.
February? Did they report already? I don't even know. I'm literally not paying attention to that position because I just don't care about it. Yeah, if we hold that one through ER, I don't care what happens to it because it's down so much now that if I lose the remaining balance on it, I just don't care. I've already written that position off as down to zero. So if they were to report and it goes to zero, I don't care. If it were to report and recover some of the loss, then I look at that as a bonus and say, oh, wow, I wrote it off as zero. I'm getting 30% back when I already thought it was going to zero.
Yeah, that's right.
And to show you how much I don't care, I don't know when Oatly reports. I'm literally not watching that position.
You're going to be mad at me possibly. You could actually critique this. I actually cut that pile of garbage.
That was a good move. It's a crappy position.
Only because, and this is where I think this might be a little amateur of me, I just got mentally sick of seeing it sitting there every day, mocking me.
Remember, when we started talking, we've said this, right? Sometimes you want that feel-good win. Like, I'm not trading for 10%, but I've had 16 losses in a row. This is up 10%. I'm going to lock it in and enjoy that 10%. Great. That's a feel-good trade. But you did the same thing in the other direction. It felt good to not look at that POS every single time you logged into your account. So it's a valid reason, right? I don't want to, every time I wake up in the morning, the first thing I see is this crappy position. I'm tired of it. I don't want to do it. Get rid of it. And then whatever it does, if it recovers, so what? Don't look back. Because you're just so tired of looking at it. Get it off the screen. I'm not going to yell at you for that, even though you thought I would.
That's good. I mean, I felt it was kind of amateur because, like, it was down so much. I might as well hold it and just see what happens when they report. But it just
sometimes it's just so mentally draining staring at it, though. And that's why I don't look at Oatly, right? It's one of those things where if I looked at it every day, I'd be like, oh my God, it's down, 80% or whatever. I don't even know what percent is down, but it's a lot. If I looked at that every day, I'd get pissed.
Yeah.
So I don't even look at it. I know it's down so much that I just don't care about it anymore. So if I had to look at that every day, that's not how you want to start your morning. Get rid of it. Just don't look back. Find another trade.
Mine was down 85% when I cut it. And I got to say, I've never had anything come back from more than 80%. I've been doing this a lot, nowhere near as long as you have, but I've never had anything, even a top tier flow that happened, the very few that happened to get down really low. I've never had anything come back from more than like 70%.
We've seen some in the 60 to 70% range. I don't want to see something get that far because the amount it's going to have to move to recover is insane, right? But we've seen some of those top tier flow trades go down 60, 70% and come back.
Yeah.
Now, again, how do you manage a 70% loss? Exactly how we started. You've got a position size such that if you're willing to ride out with the whales, and that might not be your strategy. You might say, hey, if it breaks this level on the chart, I don't care what the whales do. I have to cut the position. But if you position size knowing ahead of time, this might drop 40 or 50% and it's not going to spook them out. I've got to size it such that I can take a 50% drop on mine and not get spooked out myself. That's how you manage those trades. But if it's down 80%, there's a chance something's coming back, but it's a very, very, very slim chance that it does.
Yeah, I had 3 contracts. It wasn't pain at all, but it felt good. That was the most pleasurable loss. I felt like a pagan. It was like a pagan pleasure loss when I just murdered it, when I killed Oatly. I loved it. And I realized I'm too emotional about this. I need to stop and never. And I like vegetarian food. I like the whole vegetarian plant food space. I was a vegetarian for 21 years. I mean, I like that idea, but like, man, I see it now. I walk through the grocery store and I see Oatly sitting there and I just kind of look at it, you know, and I realize that's too emotional. I need to just move past the Oatly thing. So I'm good now. I've moved past it. Don't worry.
Yeah, and that's the other reason why I don't care about the position because again, it's just a trade to me.
Yep, that's right.
Right, it's down the amount that it's down. In my mind, I've already written it off. If it recovers a little bit, great. If it doesn't, oh well. It's just a trade, and it's a bad trade, and I'm going to have 25 good trades to cover the loss of that one, and then I'm going to have another 2 or 3 bad ones, and then another 15 to 20 good ones, whatever it is. In the long run, I know that the way I trade works out, so I don't care about one particular trade that's going to cost me money. I don't want to, but it happens. Right? We're not perfect. That's one of the trades that I just chalk up as a losing trade that I took. And like I said, if it recovers a little bit, great. If it doesn't, it's already written off in my mind. So I'm not emotional about it. It's not something like I'm not going to walk into the grocery store and look for Oatly and empty all the cartons on the floor. It's just a trade.
I don't seek it out and commit violence toward Oatly packaging or anything like that.
Listen, in my defense, this sounds great now. 3 years ago, I would have taken every Oatly carton, opened them up, and dumped them all across the floor. Hey, 3 years ago, me versus me now is a completely different trader. I absolutely would have done that.
That's what I'm saying. Like, do you have a ticker that to this day, you don't have to share it if it's too actually emotional, but do you have a ticker to this day that you just have hatred for because of some early loss or something from the early days? Or no?
Not really from the early days. And this is how bad it is. I forget the name. I think because there were 2 or 3 of them that did this to us. And here's the thing. I took a loss on a trade and this is what I was talking about earlier with if you don't have trade management, no system's going to make you money.
Amen.
There was a profitable trade I was in that I ended up taking a loss on it. And it was a profitable trade by a decent amount, but I didn't close the trade. And by the time I did close the trade, it was a pretty decent loss. And that, I think, was USFD. And Charlie knows this one. Above the Ask knows this one because we were all in it. And I think we all did the same thing. We were up whatever percentage we were up. And it was like the day of or the day after we opened the position. And it had like 3 months or 6 months of time. So we're like, I'm not closing it out. And if you know me, that's weird because if we're up a decent amount the same day or the day after I open a position, I'm closing it.
Yeah, you're gone.
For whatever reason, this one I was like, you know what? There's plenty of time. I'm not closing it. And we were up a good amount. We went back to even, and then we lost money. By the time we closed it, we booked the loss. And again, there was like 2 or 3 tickers we did that with. I think USFD was one of them. And now anytime we see a food related ticker, it's PTSD. We're like, oh my God, remember that one we had a great trade on and literally screwed it up? intentionally almost, because we had profits and we just watched it go down to zero and then red and we didn't do anything about it.
Yeah, I mean, that's not a light subject. I really think, I mean, I know people do get PTSD from trades gone wrong, and people are relating to this. A couple people are commenting like they've cut contracts at 5% loss with, 2 or 3 months to go to expiration, and then it would turn around to make, just hundreds of percent gain after that.
5% is way too tight of a, like, I won't cut anything for 5%. The spreads alone might get me out 5% on the stuff I trade sometimes.
Yeah, options. Yeah, it's interesting. I would never say, do a stop loss to anyone that you're not comfortable with, of course. I mean, everybody's unique, but is this correct, Mike? To me, it seems like options require a little bit more breathing room with the stop losses to me.
I say so. Because I get a lot of people that are like, oh, I'm getting stopped out of so many trades. And I'm like, well, let me look at one of the trades you did. And they don't even need a chart. They say, oh, no, if it just hits 10% down, I cut it. And to me, you can't trade options if you're only willing to risk 10%.
Yeah, that's tight.
You can have one, and again, it's not just the underlying ticker, it's the IV, right? So you can have a particular chart and maybe you get a news headline and you get an IV spike, and that one IV spike might change the contract enough to take you out of the trade, even though the chart didn't move enough to take you out of the trade.
Yeah, that's true.
So if you're doing options and you have, and again, you guys heard me say it a billion times, I don't use a set percentage for stop loss, but I know a lot of people do and want an idea. If you're doing 20, 25, 30% stop loss, it's hard to tell someone how to manage their money, of course.
Yeah.
I just think if you're doing 20 or 25% stop loss, you're not giving some of these enough room to move. 20% down, 25% down seems like a lot, like, oh my God, I'm down a quarter of the position already. But unless you have perfect entries, these positions might move against you a little bit. And we've had flow trades where we've gone in them and literally 10 minutes later, we're down 10 or 15%.
Oh yeah, yeah, no doubt.
So to me, a 10, 20, 25, 30% stop loss, unless you just have absolute flawless entries, I don't think you're giving these positions a lot of what they might need to work out.
And maybe right there also is a great place to talk about position sizing. I mean, if you have a position size that is extremely uncomfortable to be 25% down, it's possible maybe the position's a little bit too heavy,
Absolutely.
for your particular situation.
And yeah, so here's the other thing, right? Let's use the MU example that we just went through here. If you entered at 91, and again, I don't know it's going to open at 91. We're just using that number. Let's just say it opened at 91 and you did like that trade. And you say you went through the math that we went through and you said, okay, if it retraces back to the 89 support, I'm going to, with a 5 contract position, lose $460, right? That's a lot of money for me. I don't necessarily want to do that. I kind of like the trade. So what you would look at is say, you know what, it's too far away from that 89 for me to enter. Right? So position size is one. You can manage that trade based on position size and says, if I'm willing to lose $500, I can enter here with 5 contracts. If it drops to support, I will be at my max loss. So I'm still okay being in the trade if it gets there. The other thing to say is I'm not willing to do that. If it goes back to 89, that's where I'm going to open a starter position.
Right. Yeah.
So you just don't take the trade yet. So it's position size, or it's telling you I'm chasing the trade. I don't want to take it. Or we've talked about this before. I'm willing to lose 500 per trade. So this entering here would say I can take 5 contracts. If it drops to support, I'm still at my max loss or within my risk tolerance. So I won't have to exit unless it breaks support. But instead of buying 5, I'm going to buy 1 contract here.
Right.
I want 5, or I'm okay to buy 5 with that risk tolerance. I'm only going to buy 2 though. And that way, if it does drop, then I can pick up the other 2 or 3 contracts. So again, there's multiple ways to manage that scenario. Position sizing is just one of them, but I feel like people don't pay attention to that because we get a lot of DMs from people that say, oh, I stopped out of that trade. You guys are still in it. What made you hold it? And I look at the chart or I look at the flow and I say, well, it's flow for 4 months out and we just got in it 2 days ago. There's no way I'm closing it. I don't care what it looks like. I say, oh yeah, but it was down, 15% or 20%. I stopped out. So that's position sizing.
Yeah, I learned that lesson very early on when I first started trading options, when I switched over to options, and I just got nervous because something got down. I think it was down 28%, something like that. And when I was just doing commons, I had this idea of, okay, here's the maximum thing. And I hadn't switched over yet. I wasn't considering delta at all when I was, in these early days. But I remember I took a 30% almost loss on a position that had 3 months left. And I just later, like in this odd fit of realization a few days later, I thought, why did I do that? I mean, there's so much time remaining. And it's just back when it was pretty much a bull market too, by the way. This wasn't, choppy city. I mean, I'm sure it went on to profit. But I learned that lesson pretty early with that. I just felt the need. It was just an emotional reaction to get out because it was 38% down, et cetera. And there was months left. So that's something I think newer traders will learn probably the hard way almost every time. If you're just
Learning how to exit is the worst part of trading, right? So we get questions all day long. How do you guys enter these trades? I can teach you technical analysis. I can teach you flow. Great, I've got that down. Now, how do I exit? And
yeah.
there's really no way to answer that because I don't know your situation. I don't know, you have a $20,000 account and that's all $20,000 to your name, or you've got $1 million in the bank and you're just playing with 20,000, right? I don't know this. I don't know if you're comfortable swinging or if you're comfortable locking in profits. I don't know a lot of things about what you're trying to do. So trying to tell people where to exit a trade, it's impossible to please everyone.
Yeah, or
Right?
on the other
You put
end,
out a posted trade and say, I'm going to exit here. And if it keeps running, people are pissed at you. And
oh,
if you don't get out there and it drops, people are pissed at you. So your trade management might not align with everyone else. So it's hard to tell people. So what you can do is say, I'm exiting here because of this, and let them decide if they like why you're exiting and figure out if that's what they want to follow. But I mean, it's learning where to exit. It's one of the hardest things of trading.
and on the other side of the $1 million account, maybe this person needs 50 extra bucks to make their car payment this month. So should they exit now when they're up $60? Like that's a different situation, and it's just a wide variety. And do you think that leads to a lot of people selling too early? Mike, do you like that transition? Was that good?
That was pretty good. You've got some skills to this.
Oh
I
yes.
think that so the whole leaving early thing comes down to a lot of things. One of the biggest things is your personal relationship with money.
Yes.
Okay, so
Talk
I
about
know
that.
one of the reasons I close things early is because there was a point in life where I grew up not super rich, but not worried about money. Okay, and
Okay.
then I went off on my own, and there was a period where I had pretty good amount of money. Then there was a period where I had absolutely nothing after the period where I had money. So my relationship with money is that
Yeah.
I have a way to go out and make money and not really stress about it. But I've been in a situation where I've also not stressed about money and then lost everything. And
Mm.
that, for those of you that don't know my story, that's not a YOLO that I did. That was an outside of trading business.
Yeah.
Okay, so I had money and I lost the money. So my relationship with money now is that I'm super appreciative that I have a way to wake up in the morning and make a good amount of money. But in the back of my mind, it can always in a split second be taken away.
Yeah.
So when I had these swing trades up 40%, 60%, and then 2 days later they're down 40%, it
Mm.
just reinforced to me that yes, I have a way to go into the market and make money, but 6 candles later that could be gone. So I'm more of a scalper day trader because when there's money in my hands right now, I can lock it in and put it in my hands, or I can wait and see what's going to happen. That wait and see what's going to happen is a little uncomfortable to me because I've been in situations where I've had money and then lost it. So ingrained in my head is that feeling of, listen, you've got money right here, or you've been in situations where you've had money right here and then it went away. So I'm kind of predisposed to take that money and run. Now, It's not up 20%, take the money and run. It's I will find a reason in the chart where I can reasonably say I have a reason to close it here. But that reason I'm closing is shorter term than if I looked at a longer picture and said, yeah, but there was a better reason to hold it rather than close it, if that makes sense.
Yeah. I don't want to skip over that. Everyone, that like your personal relationship and situation with money is a paramount thing to think about. I mean, everyone should think about this. I understand a lot of people don't worry too much about money. They have that privilege, maybe, or maybe they don't have a lot of money. They just don't worry about money. But we're in a situation where this is a capitalist society, and you and your people and future you and your future people are going to need money to survive. And that's an important thing. You know, a lot of people will approach options and trade theses, and they have all these. I think they sometimes don't think enough about what is your relationship with money. You know, you're not shallow for thinking about it. You're not wrong if you want to be wealthy one day. Those types of things. Just what
Now,
is
most of us
your
trade for money, right? You're
right?
you're
That's
the
right.
weird exception.
Well, and I'm the one
Not to
part-time.
put you out there like that, but we had that conversation where for
Yeah.
you it wasn't necessarily about I made $20. It was about I made the perfect entry and a perfect exit. And if I got $20 out of it, great.
Yeah,
And
I'm
I'm
trying
just
to. Yeah, that's right.
River trades for more than $20. Don't stick to that number. This guy's a beast. Don't let him lie to you. He trades Tesla. But like the idea of most of us are trading because of course we want to make money doing it.
Right.
And it's a way that you can make more money in an hour than some people make in a week. So this is why we do this, for money.
True.
But there are those people, I don't know if you want to tell the background on it or just, expand upon it, but you don't necessarily trade for money. You trade for the thrill of knowing I looked at the chart and evaluated a good spot to enter and a good spot to exit, right?
Yeah, that is true. That's true. I mean, I'm not entirely motivated by cash when it comes to trading. I don't want to lose it, but yeah, it's for me, it's a weird, torturous form of self-improvement because I like to trade. Tesla is a great example, but the mega caps for me are a test. Can I make a good entry, and then can I control my psychology when Tesla starts moving and I'm in a trade? Can I look at the chart and use objectivity to get out? I mean, a lot of times the answer is no. I just freak out and say, oh, I'm up this amount or I'm down this amount. I have to leave. But that's right. It's not necessarily primarily money driven for me at all. It's about, can I control the demons in my head that are out of control in many parts of my past and my life? Is this an area where I can practice self-reflection and use objectivity and
And
logic?
you know what I love about that, which most people need to listen to,
Yeah,
is that you're mechanical,
I try to be. I
right?
try.
You're not trading because you want to make $1,000. You're trading because this chart says this is a good spot to exit or
Right.
enter. This spot on the chart, what it's doing right now, live price action that I'm watching right now tells me this is a good spot to exit. You're a mechanical trader. You're not trading because of money. Now, there's the emotion part of it, but
Yeah.
it's not, I want $1,000, so I'm going to find a trade that gives me $1,000. Your mentality is, I'm going to find a chart that gives me an entry, and I'm going to find where the chart gives me an exit, and the money is just a scorecard. It's, I made money. Okay, so I did good. I lost money. Okay, I didn't do good. So what I
Yeah.
love about your mentality is that it's purely mechanical. I don't care about the money. It's going to come if I made the right trade. I want to focus on, am I getting in at a good spot? Am I getting out at a good spot? And if you do that repeatedly, you're going to have the money part of it come along with it.
That's true. I wonder often, like, if I were full time like yourself, and this was the way that I pay for my 15 kids private school, and this was the way. I don't have 15 kids, but that's the point. Like that to me, I don't think I would succeed at it, and that's some amazing stuff because you're mechanical as well, and you're doing it full time. So that's why you're one of my main mentors, and that's what I love about your charting because you're mechanical and successful at it, and you're doing it full time. Like everything's on the line. Like I'm
You
sure
know,
you don't need to be
you,
reminded of that, but everything is on the line, Mike.
no, well, it is. Like I look at every trade as a battle, right? I'm going into battle. And it actually, so I almost got that mentality from Teresa. If you've taken her classes a long time ago, she used to say this, I don't know if she still does in the current class, but she'd say every time you go into a trade, it's a battle with the dragons, right? You're trying to fight this dragon, get a little piece of the pie, rip a dollar bill off of his body and run away,
Yeah.
right? So every trade, it is all on the line.
Yeah.
Not everything as in if I screw up this trade, I'm going to be homeless, but every trade, I look at that as a battle. I'm going into this trade. Did I look at the chart and say, yes, this is a valid way to enter a trade right here based on XYZ? That's the battle is in your mind, and then it's with the chart and analyzing.
Yeah.
Okay, I'm in the trade. Now, am I looking at the trade properly to make sure I manage it and exit it properly? It's a battle. Everything is on the line. And you want to get to the point where it's so mechanical, you don't really think about it. Okay, boom, it bounced off support. I'm entering a position. Oh, it broke support. I'm closing it, right? There's no emotion. There's no battle anymore. It's just if the chart does this, I do that. When the chart does that, I do this, right?
Yeah. Yes. Yes. Yeah. That's my goal. I recently had great success at that Moderna bleed out last Friday. Remember when Moderna just
Yeah.
just wouldn't stop? I was trying not to look at P&L, but I was. I'm not enlightened. I know some people never look at it, but I try not to. But it was the P&L was piling up, and it was just a few contracts. I mean, it wasn't life-changing money or anything like that, but it was like a huge percentage gain, and the chart said this is still going down, don't sell. And I was very pleased. That's one instance where it did work out, the mechanical aspect of it. But that was just a great experience to try to control because when you see the P&L rise quickly over a short amount of time, you get the probably dopamine and adrenaline and neuroepinephrine. You probably get all these chemicals released that are just giving you a high, and you think, okay, I should take this profit right now. This is great. But that particular day, it was such selling pressure. There was no reason objectively to close the trade out, and I just ended up scaling out of it and sold the last one, not at the very bottom, but pretty close to it. And it was awesome. It was a great mental win for sure.
And that's a good lead into, so we were trying to do the topic of selling too early, which we kind of got derailed because last week there was a lot of questions on position size. But as far as selling too early, you kind of hit the nail on the head, right? So I'm in a trade, I'm up $100, I'm up $200, I'm up $300. That dopamine it's rushing through your body. You're getting excited, right? You're getting those goosebumps. You're going, oh my God, I'm up 300, I'm up 400. Oh my God, it would take me a week of work to make this much money, and I just did it in 12 minutes. Close. And then what happens? The next 12 minutes, it keeps going, and oh man, I sold it $1,000. It would have been 8,000.
Yes.
You got excited. You were in the heat of the moment. Your adrenaline was rushing. You're excited about that money. You close the trade to lock it in because you're so excited.
Yep.
You're not looking at the chart saying, oh wow, it had another $3 it could have run before it hit any kind of resistance. And that doesn't mean it's going to run $3 until it hits resistance. It could reverse right there. We don't know.
Sure.
But if you want to be that mechanical technical trader, it happens to everyone. You get excited about a trade, right? Oh my God, I'm up $500. This is awesome. Click, close the trade. Boom. I'm excited. I just made $500. At the end of the day, you go back and you go, oh my God, wow, that would have been 3,000. Holy crap. Right? But in the heat of the moment, you get excited, you lock it in for whatever reason.
Yes.
We all do that. We've all done that. It's a matter of you're either going to sell too soon or sell too late because we're not timing tops and bottoms.
Yeah, I've got a couple submitted trades here that definitely
Let's go through them because I really like this. I know these episodes are running a little bit longer than we intended initially, but what I would really like for these to be is where a chance for people to send in their trades to us and we can look at them and maybe we see something they didn't see. Maybe we agree, hey, that was a good entry. The chart just reversed. But I don't think there's a lot of services out there where you can say, hey, this is a trade I took. Can you tell me what you see to see if you would do anything differently? So I kind of want this to be focused on people sending us trades that we can look at and share I look at a chart differently than you do. You look at a chart differently than the person who took the trade. So it's not about what's right or wrong. It's about, was there something in the trade that I could have seen that I didn't see? And depending on how we trade, you're going to see some things that I won't, right? I don't use a lot of indicators. So I might look at a chart and say, well, support is here. You sold it a little bit early. You didn't give it enough room. And you might look at a chart and say, well, that support area that he's talking about is actually also VWAP for the day, right? So we can all look at something and add a little bit of a different flavor to it. So I would love if this program really became a forum for people to say, hey, I took this trade, but I'm not sure if I did good. Can someone else take a look at it? I'm not saying, again, that we know what's right or wrong. It's just a different way to look at a chart that someone else might not. So if you've got submitted trades, let's pull one up. Let's go through some of these and see what people are doing out there.
Yeah, definitely. So and along that, guys, there's I think there's a handout attached to this particular, actually there's not, but our info is available. Definitely submit these trades, because in the future, next week, there's no what went wrong. I also do the podcast Riverside Chats, and next week is a little chat with Hell's Bells. So we're going to be off that week. But when we come back, what Mike is talking about, we're going to definitely start focusing pretty heavily on these submitted trades and this idea of selling too early. I'm sure you guys have heard people say fear and greed explains everything amidst trading, but the idea of fear makes you sell too soon is something that people often have kind of questioned. You're like, well, greed makes sense. It makes me hold too long, but how can fear make you sell too soon? So we'll kind of talk about that as we go through this. So here is a member submitted trade. Let me get my professor pointer ready. Here we are. So this is Amazon. And there's your first clue right there. Amazon, for people who haven't traded Amazon, Mike, first off, what's your quick advice about that?
Depends on your experience with options, not just trading, but options. So if you're saying you're new to options, my only bit of advice is do not trade Amazon. The reason people do is because you can get a single contract and you can literally make $2,000 on a single contract. What they don't realize or don't want to pay attention to is you can also lose $2,000 on a single contract. So for new traders, or even if you've been trading but you haven't been trading options, do not trade Amazon, Tesla, Roku, maybe Netflix. Some of these tickers, they move really good, which is why we like them. But if you're on the wrong side of it, that really good move is going to crush your contracts. So
yep.
If you're not experienced with these options, they're too volatile, they move too quick. You can panic sell on a single candle and just stay away from them. If you're experienced, these are the tickers you want to be in, because this is a position where you can do a $10,000 position size, and 3 hours later that's worth $36,000 or $40,000 or more even. Like, these contracts will move big. So you got to understand they're going to move big in both directions, whether you pick the right direction or not.
There's no doubt. The first I don't do Amazon a lot, but I've done it. I've done maybe a couple dozen Amazon trades. I just don't know it very well yet, so I haven't done it that much. But the first Amazon contract I did, I lost 60% of the premium just in a matter. It might have been 1 minute, literally. It might have been a 1 minute candle. It was just astonishing. So this person sent this trade to me, and this is his or her entry, and this is their exit. And as Mike is saying, this is a very profitable trade, possibly. And then the person got out here and watched it run and just felt really, really, actually the phrase was sick to their stomach watching what happened up to this point. They said when they got to this huge green volume bar, she just turned it off. She didn't trade anyway. That was the end of it for her. She couldn't believe that she lost out on all this money. So I would like to just kind of look at this and say, first off, the thesis was this gold moving average here. They didn't want to sell it unless it closed below that. So there's some interesting, if that was the planned exit, just with that dynamic support, there's some interesting things here because they didn't close, right?
That's the first thing I noticed when you said that.
This closed below, and then but this is turning green, and it closed, so she hung on and it went up, and partially for feeling, she says, relief that she did not sell here, she was out here. But I will say, if I bought here, I would probably literally have sold here if I was doing an Amazon. That's just how I am. I'm just like, I respect the Amazon warrior, and I would not have held right through this downturn right here, just simply because of the emotions involved. I think it would have kind of gotten me. So that was the idea. Went in here. The only reason given was this big green volume bar right here that you see. Like that, she went in here, held through here, kind of didn't follow her own rules, and exited here. And I found it was interesting. She wasn't, happy for long that she ended up making a profit on this, but it turned quickly into sadness as she watched it run. So what do you think about just her entry here based on this volume, and the plan to exit upon the breach of this dynamic support and then exiting here? What would you say about that trade?
I don't think the entry is bad at all. Like the line you have drawn across the top of that red candle, that was the high of the day, and it broke above that level. So you can say, hey, it's breaking above high of day. I'm going to take this position on some increased volume. The entry, I don't think, is a problem. And in fact, I don't think that was her issue either. I don't know this particular trade setup, but based on what you're saying, yeah, I don't think the entry is anything she's concerned about at all.
Yeah, I think that's an informed entry. You're right. That's breaking the high a day with volume. That's a good entry.
Yeah, I don't have a problem with the entry at all there. I do have a problem with, you stated if it breaks below this level, I'm going to close, and did not close. So even though the trade worked out later, you specifically stated if it breaks this level, I'm going to get out, and you didn't. In this case, it worked out. If it didn't work out, and let's just say that represents, this is Amazon, so let's just say that represents where it broke that line that you said you were going to get out. Let's just say that represents a $400 loss. I have absolutely no idea what it would have been, but let's just say that's a $400 loss. That's where you stated you were going to get out. If it didn't turn and go to the upside and it broke further down, that $400 loss could have been a $1,400 loss.
Yeah, no doubt. No doubt.
Okay, so not looking at anything on the chart alone, just saying if it breaks this level, I'm going to close it. It breaks that level and you don't close it, I don't like that. Now, in this case, it worked out and you got rewarded for it. But you either want to adjust your rules for exiting or you want to stick to them. Like if you're exiting and they always bounce after you exit, you need to adjust your rules because there's something you're not looking at. But if it's a matter of I'm watching this EMA and if it breaks this EMA, I'm out, and you don't do that, there's a discipline there where you need to refocus and say, hey, listen, either I'm watching the wrong EMA, right? If you listen to Pete talk, he'll say each ticker has its own personality. So whether it's SMA or EMA and whatever number it is, that's going to be dependent on each ticker. So if you know that and you have a rule that says it breaks this level, I'm out, and you don't cut when it breaks that level, that's more concerning to me than the results of the specific trade. Now we've all done it, right? I can't yell at anyone. I've done it myself. That's from this point of my looking at this situation, that's just the first thing that comes to mind.
Yeah, and on Amazon, like from here to here, that's a pretty big drop. That, and she hung on to this. So I mean,
like I said, that could be another $1,000 difference in a contract, depending on, if it's a Monday, those might be $4,000, $5,000, $6,000 contracts, and that drop might be $1,000 worth. Hell, I mean, those contracts could be 7,000 or 8,000. It's just a big drop. You've got to respect why you're getting in and out of trades. Now, here's the thing: it dropped below that line. You cut the trade for a loss, right? Or maybe, well, based on the entry, I would say that's going to be a loss, right? Probably, when it breaks back above that, you just get back in. So rather than take a $400 loss down to $1,400, you lock in the $400 loss and say, it broke my level, I'm out. When it crosses back above, you get back into the trade.
That's a great point, and that brings up this point. If you stay in, because I've heard people say this, they don't do that because they don't have enough buying power to get back
If
in.
that's the
I
case,
would
you
say
should not be trading those tickers.
that's right. Don't trade Amazon if buying power is a problem at all. That's what I think.
If you have a $10,000 account and you're buying a $4,000 Amazon contract, it's just a single contract. Yeah, but it's 4,000 out of a $10,000 account. You don't do that for risk management purposes.
No.
And now I know why people do it, of course. Well, I have a $10,000 account. It can be 15,000 if this trade works.
And
The
I saw
keywords are if that trade works.
and people double their account on Twitter all the time. So I want to do that.
Yeah. So if it's a case where, I can't close this, or if I do close it, I can't get back in because of buying power, that tells me you should not be trading that ticker or that size. Maybe it's a $30 contract, but you're buying 16,000 of them, right? So if it's a situation where if I close this trade, I can't do another trade because I'm out of buying power,
Yes.
it's a trade you shouldn't be in. Unless, you've got a $100,000 account and throughout the day you've worked up, 98,000, and hopefully you're profitable at that point, right? And you've got $2,000 left. So you say, well, if I close this trade, I'm out of buying power. That's one thing. If you have, $10,000 and you've used 9,800 of it, just taking all these random trades in and out, that's a problem. You shouldn't be trading those big dollar tickers to the point where if I take this trade, I have no more buying power. Just my thoughts, not set in stone. That's just how I look at it.
I agree with that. Jenny B tweeted out, the great Jenny B, fellow Black Box Stocks moderator. You guys, if you're in the community, you gotta follow, you gotta check her out. She's amazing. But she tweeted earlier this week, and this is just a paraphrase. She said, if you're using all your available cash during a trading day and you're ending up just barely green or barely red, it's a sign that you're most likely over trading. I thought that was right on.
I love that.
Yeah, over trading. We need to do an episode just on over trading. But nonetheless, yeah. So I like this trade. I mean, that's a good entry. I agree. That's breaking the high day with volume. Look at that. That's good. I would have seen this big red candle right here, and I gotta admit, I think I'd be out with that red candle. I wouldn't want to hang around because that red candle relative is about the same to this buying candle that got me in. That would make me nervous. I would probably have bailed right there for whatever profit that is.
Well, if you're looking to scalp something, you can absolutely scalp for a single candle.
And I never did.
A scalp is a big position for a very short period of time. And even though it's a short period of time, you're capitalizing because the position size is such that you don't need a big move. So if your intentions are to scalp and you scalp one candle and make good money, that's what you're trying to do. That's a good trade. And what it does after that doesn't matter. If your intentions are to day trade, well, then you don't want to get out on a single candle because you're trying to hold it throughout the day for as long as the trend is, trend is your friend. So if your intentions are to scalp and your intentions are to day trade, those are two different scenarios where you can't look at the same chart and say, well, this one was good, that one was bad. Right? Yeah. Or you can say this one was good, that one was bad, right? Each scenario has a different set of criteria that you're looking for. So if your intentions are to scalp and you take a one big candle on Amazon and you get out, that might be a great trade. The day trader might look at it and say, well, why'd you close, right? But the scalper would say, my intentions were to get in, hopefully get one big quick move, which I got, and I got out.
Sure, yeah. And I've never done anything except scalping on Amazon or Tesla, frankly. I've never swung anything. I've never even really had a lengthy day trade. I'm just very cautious with these mega caps and the movement, like you're saying. So, but if we were talking day trade, I thought about this too. It could be interesting to look at this entry here. If you notice, I don't know what it is, but this orange, this whatever color it is, I've got problems with colors, but this average here, you see it kind of came down and tested there, and then she got in here. What if that would have been the thesis, right? Of course, you can go back, and of course, everyone, we're looking at dead charts that are completed. It's a totally different thing when you're in the moment. We understand that, and we're not criticizing anyone, but just to look at possibilities here, like what would have kept you in, Mike? Because you have day traded and probably even swung Amazon and mega caps like this. But that would have been a great thing.
I'm in Tesla or Amazon. I do not swing those.
You never. Okay.
I'll day trade the crap out of them, but I do not swing Amazon or Tesla because whatever I'm looking at the end of the day could be the exact number, but the reverse as
Yeah.
soon as the opening bell rings.
But
So I will not. I've done it before, but it's kind of rare that if I'm in Amazon or Tesla, my intentions are to be out by the close of day. So I typically will not swing those.
yeah, sure.
But so going back to your question,
So that would have been.
whatever that orange line is, the reason I wouldn't look at that one for me personally. Now, if you did, yeah, you had a perfect exit. You can see right about where you are. It bounces off that line and continues. That line would keep you in the trade all day. Yes. The reason I wouldn't use that line personally is it's a little bit far away from that line.
Yeah.
Right? So you can see if it pulls away from that line to the upside,
Yeah.
in order to go back down and test that line, you're giving up a lot of profit to do so.
Yeah.
But remember, I'm more of a scalper. So if I'm trying to day trade it, I would have to know what that line is, what the number on it is. But obviously it's a good line that Amazon is going to pay attention to for a day trade. For me, if you look at how stretched from that line it can get, to go all the way back to that line, to me, would be like I'm giving up way too much of my profits to allow it to do that.
Sure. Yeah.
Yeah, like right there and exactly where you are there. That move alone could be such a drastic move in the contracts that I'm looking more as a scalper where I'm going to lock it in and not allow it to go all the way back down that way. Kang would be completely different. He would look at that and say, well, I'm going to give it enough room to get back down to that line. So different types of trading. And Kang would obviously make a million times more money than I would on this exact chart right here. But I'm looking at it not letting it get so stretched from that line and then giving it all back to test that line.
I agree with that because if this is the entry and then it comes up here, and if it went down all the way, as this line would be a little different, but as it went to here, that's a big loss. That's a big loss. So that's a good point. So what would you maybe like to use as a day trading exit for this? What would you, if you went in here for that reason of the high of day break, what would be the 7-star Mike reason to exit this one?
So I don't want to get out. Like I'm going to let it move around a little bit. I don't want to get out as long as it's above my entry, right? I would basically start looking at, I'm going to put a stop loss, a little bit less than where I got in. Because if I don't have the perfect entry, it might not retrace to where I entered. It might drop a little bit from there. So I always say, if I'm in a contract at $1 and those contracts go up and then back to $1, I'm not cutting it there saying I'm not letting a green trade go red. If it goes from $1 to $6, I'm not letting it go back to $1. But if it's $1 and then it's like $1.40 and it's back to $1, I'm probably not cutting it there, right? I'm going to give it that a little bit extra wiggle room to drop below where I got in to see if, support and resistance isn't an exact number, it's a zone. Or sometimes it's an exact number, but sometimes it's a zone as well where you've got to give it a little bit of wiggle room. So I typically don't exit trades where it's at or just below where I got in. I am entering trades with an allotted wiggle room that if I didn't have a perfect entry, I'm understanding that I could be red for a little bit before it goes green. Now on that one, you see how, so again, this is looking in hindsight, but I just know how I've traded over the years. I know my personality. After the entry, you see.
You still there, Mike?
Sideways.
I'm sorry.
I will not hold through a consolidation like that because I'm looking at the top wick of that red candle right after the entry.
Yep.
Yeah, right there is resistance. The first red candle to the left a little bit. Left, 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 left. To the left. Other left.
Other left.
That one. The first red candle after that entry there.
Right there.
Okay. So you see the top of that candle is resistance. The next candle, that level is resistance. Yeah. The next candle, that level is resistance. So I'm going to look at that as a scalp and say, hey, if 3 candles in a row, it's not breaking above this resistance, I'm going to close the trade.
Right.
And again, that's just, I know my trade personality. So I'm going to close the trade there because 3 candles in a row, it won't break resistance. I'm going to close the trade saying, hey, that's my short-term resistance. And then I'm probably going to miss out on the whole rest of that trade unless I find another reason to entry.
Nice. Yeah.
But again, I have that short-term look to it. So that's
Right.
my trade, right?
Right.
So again, if I trade that way and Kang takes the same trade, he's in it the whole day and he's going to smoke me on the results of the trade because he just has more of a longer term day trade. And I'm literally looking for, like I said before, my relationship with money is I can have it and then I cannot. So I'm looking for that period right there is a 5-minute period where Amazon is just not moving. So I'm just going to lock in the trade and look for another trade that is moving.
Yep.
Whereas someone else as a day trader might look at that and say, well, I'm going to give it wiggle room to see if it breaks above resistance. I'm looking at it saying it's not currently breaking above resistance. So that's my reason to exit. And I'm going to go find something that's moving rather than watch something just go sideways.
Yeah, and I totally agree. I think that also the notion of looking at this completed chart and picking out this line here and saying, okay, look, that would have been a good thing that could get. I think that's a psychological toll, just toll that a lot of people can't deal with. So I don't know if the notion of EMA trading or just moving average trading. I mean, I do some of it. I know it works for a lot of people, but for me, the more the higher the cap is on the stock and the higher the contracts are, that's just not realistic for my mind. So I would never be able to just let it go here and it's almost there. So I would never use that personally on Amazon. But I know people do. I know we've got moderators that do that all the time and they just have that ability. All right,
You absolutely could, but here again, so I don't like to BS people. Like when it comes to trading, it is what it is. There's so many people trying to fake on Twitter and social media that and people say this in the chat room, right? I'm not everyone's cup of tea when it comes to the chat room. I'm very direct. I'm very straight to the point. Some people like that style. Some people are put off by it. I get it. That's just the way I am, though.
That one
I
person
can look at this chart and say, yes, ideally you want to use that orange line and bounce off of it. But I know for a fact that's not how I would have taken this trade. So to sit here and say, well, yeah, if you look at that line, right? Of course we can after the fact, but I know the way I trade. And I know that I'm looking for scalps first, day trade second, swings third.
Yeah.
So I can't sit here and say, yes, you would look at that line and say, oh, unless it breaks below that line. Ideally now, yeah, of course. But knowing my personality, I can't BS anyone and say that's what I would have done because I know that's not what I would have done. So this is just the reality of the way I trade. I'm going to see that consolidation going sideways and say, hey, you know what? I'm in a profitable trade. It's Amazon. It's just consolidating, especially if that's Friday and you're in a weekly contract.
Oh yeah.
It's just consolidating for 1, 2, 3, 4, 5, 6 minutes of consolidation. I'm just going to say, hey, you know what? I'm in a profitable trade. I'm going to lock it in and go look for something that's moving.
That's right. That's right. Yeah, and I think that a whole lot of people are just like you and me, and that it wouldn't be following that EMA all the way up and just checking in on it every now and then. You know what I mean? Just checking in to see. No, that's not how most people's psychology works when you're talking about.
And here's the thing: it depends on the ticker too, right? If that's Twitter or AMD or MU, yeah, whatever that line is. And I don't know what the line is. I'd have to look at it and see if it would be something I'd consider.
Yeah,
but if it was something I would consider, if that was Twitter, AMD, MU, Snap, whatever, yeah, I might give it that room. But since it's Amazon, I do trade Amazon and Tesla differently because I know how wild those swings can be.
That's right. That's right. It might swing down and never come back. And there's this other trade. Let's look at this other one too. But there is an important question here that I know how you will answer it. I will answer it first quickly and give it to you to drive the point home because we agree on this. The question is, do you guys ever average down as the price action goes against you? And I will say I've done that 7 or 8 times in the past, in the early days. An option contract would get down and I would still feel conviction. So I would buy more contracts to average down to lower my cost basis. 2 times it worked out. The rest of those times I just threw away more money. So it took a minute for me to be able to say this with truthfulness, but I never average down if the action goes against me. I never average down if I'm not planning on, having more contracts from the beginning. So my quick answer is no. What do you think, Mike? What's your thoughts on averaging down?
My first thought is if you replay last week's webinar, I think we spoke about that for about 10, 15 minutes or so.
Mm-hmm.
To directly answer the question, I don't average down.
Yeah.
I will not do it. And the reason for that is if I'm in a trade and it's not doing what I thought it would do, why do I want more of it? It's not doing what I thought it would do, so let's get more? No, get out of the trade. It's not doing what you thought it would do. Get out of the trade. Don't add to it.
Yeah, we definitely had a big segment on that. But like the idea is if you're down and you start averaging down, but when I used to do that, the idea was I need to get back where I can get out even because I don't want to lose this money. And then
Right.
you had a losing mindset. You're just at a different psychological place. And I just don't. I just don't average down. And Mike doesn't. And I'm not sure if any of the full-time black box stocks trade. Do you know anyone who does average down and talks
No,
about it or is moderating?
we won't do it.
Yeah.
Now, again, so last week we made the distinction between averaging down and averaging in.
Sure.
There's a difference there. As far as, and I like to kind of phrase it in maybe an obscene way, so I won't use that language today, but think of it this way. Let's just step out of the situation, okay? You're getting into a trade because XYZ criteria was met for an entry. I'm taking the trade. The trade's a crappy trade. It's not doing that. It went against you. It's a crappy trade. Why is your thought, I should get more of it? Right? Does that, when you step back, does that make sense? I'm entering a trade for this reason. It's not doing that. It's against me. I'm losing money. So let me get more.
Buy more.
No, it's going against you. It's not doing what you thought it would do. Why do you want more of it? You're just going to lose money faster.
When we're losing money, we think illogically.
And Pete has a great line about, waiting to get an entry and this and that. And I don't know the exact phrasing that he uses, but it's something along the lines of don't be in such a rush to lose money. Right? If you're in a trade and it's not doing what you thought it would do, don't lose more money than you're already losing. Just let it play out. Or if you need to cut the trade, cut the trade. But adding more money to a bad trade just makes it an even more bad trade.
Yeah.
Now, I know why people do it. Hey, it's down $6. I just need it. If I double down, I just need it to come back $3 and I'm back even and I can get out of the trade quicker. Yeah, right. And it works. But you know what? The number of times it doesn't work overshadows the times where it does work and you get out for even or a little profit, because the times that it doesn't work, going back to the MU trade we did the example on today, if your max loss is $500 that you're willing to take, and you double down and now the trade still doesn't work out, so now you're down $1,000. Your max loss was 500 and you just took $1,000 loss. You will not survive as a trader doing that, because now your max loss is $500. Great, I took a $500 loss. I'm still within my trade plan. Well, now if you take $1,000 loss, now you have to double up on the profitable side just to get back to where you should have been. And it's that much more work rather than just stick to your trade plan. If you're in a trade that's not doing what you thought it would do, I don't see the mentality of it. It's not doing what you thought it would do. So why do you want more of it to continue to not do what it's supposed to do at twice the pace?
This is what did it for me when I used, like I said, I averaged down 7 or 8 times. One time I got out even, one time I made a little bit of profit, and the rest of the times I just wasted more money. One of the early people I knew who kind of taught me a little bit about trading, well, he worked at a prop firm. And he said this to me. He said, sometimes the way you make money trading is by losing less money. So for me, that's what did it for me. If I'm 500 down, I'm just going to take that loss, because, if I end up 800 down, then I've lost 300 more. So if I just take the 500, I'm saving that potential future probable loss from averaging down.
Right.
So sometimes that's what it is. You're protecting your capital. You make money by losing a smaller amount of money than you might have lost if you keep going down the rabbit hole. So that helped me in the early days to where.
And if everyone's, I don't know a person on the planet except for maybe some random guy on Twitter that just wants to hate. I don't know anyone that hates Maria. She, I think we can all collectively say, is one of the most amazing traders and just human beings on the planet. She's super funny.
You could be jealous of her and like hate her because you're jealous of her life.
That's the only reason you could hate on Maria.
That's
She's
right.
got a saying, and she
Yeah.
said it a few times over the years that it sunk into me at one point where, and again, I'm not preaching to you guys because if you remember my first trade as a full-time trader, I averaged down 4 times and almost lost my entire account. So the reason I don't average down is because I have experience having done it and seeing that statistically over the long run, it doesn't work. But Maria's got this saying, let's say you're in a trade for $800 and now it's worth $500. And you're thinking, oh man, it just has to turn around and I'll get back to even. She has a way of looking at it that says, if you close the trade here, you're not losing $300, you're saving the 500.
Right. That's right.
Right. So you've lost $300. You can look at it and say, oh man, I've lost $300. This sucks. Or she rephrases it and says, don't look at it as you're losing the 300. Look at it as if you close the trade here, you're saving the remaining 500. That's right. And that she said that a few times before it sunk into me, because when I started out, yeah, I did average down a few times until I realized, oh man, the times it works great, but it doesn't work more often than it does, and it's just a losing strategy. And she said that a few times before it sunk in, and when it sunk in, I was like, huh, I can let this $500 go to zero, or I can forget about the 300 I've already lost and look at it as saving the remaining 500 of that $800 trade.
You've got $200. This brings up a question. I'm going to ask you a question. I want you to be very, very honest. It's very relevant to what we're saying. Oatly is so cheap right now. You know what I'm talking about, that particular trade. Have you averaged down on Oatly? I just want to know.
So.
Oh man, here it comes. Because I think that's an interesting situation. If something is so cheap, I don't know. Tell us about that.
So here's what I'll say. I told you guys I don't BS you. I have 2 contracts of Oatly and an account where it was supposed to be single contracts. Okay. What happened with Oatly was we were in the trade. And so if you guys have to have been with us for a little bit, we don't talk about it, but you might have heard it if you've been with us for a little bit. We have this strategy called the wingman strategy. And I'm not going to go into it today. I'm not going to cover what it's all about. There's a few things we look at. So I was in Oatly in the small account, which is a swing only account, only based on flow and only based on single contracts. So I bought a contract of Oatly for that account. It wasn't a wingman strategy, but it had the look of becoming potentially that. So we saw them add Oatly a few days later to the same contract that we were in. Okay, so flow came out. I liked the flow. I bought a contract for that account. A few days went by, the trade was down, and we see them in the flow throw more money into Oatly. So when I saw that, I did add a second contract to that particular position. So I have 2 contracts in that. So technically I did average down that. It wasn't based on this contract is losing money, so I'm going to get out of it quicker. It was based on additional flow that came in to me that said the big money is confident in this trade. They're increasing their position size to it. So I did as well, because that trade was based on flow. So I was kind of using the flow as a guideline to say they're increasing their position size on this particular contract. So I'm going to follow their lead and do it as well.
No, that makes sense.
That position size can still go to zero and it won't hurt that account.
That's data driven. That's fine. Yeah, I was talking mainly like, say, over the last 3 to 4 sessions when it is so cheap right now. Is there a part of you that thinks, well, maybe I'll just buy another contract or 2?
No. And here's why.
Nice.
I'm going to cut you off before you even finish the sentence because it's an absolute no.
Good.
Like I said, I literally haven't looked at Oatly. I don't even know where it's trading. So remind me of what's the strike on the contract? This, I literally don't even know because I haven't looked at it. I'm not BSing you guys. I don't know the strike.
I killed it and put it out of my mind. I don't know.
Okay, I think it might have been either an $8 or a $10 call. I'm not sure which one.
$10.
It's one of those. So let's just say it's a $10 call.
318.10. Yeah, 318.10. That's it.
Okay. See, I actually have some kind of a memory on me. I'm surprised. So it's a $10 call, and let's just say it was trading at like $9.40. I have no idea what it was. So again, I'm just using this as an example. It's a $10 call trading at $9.40. It's now trading at, let's say, $7. So that call contract, let's say it was $2 at the time and now it's 28 cents. If I liked the trade, let's say I'm looking at a chart and saying, you know what, it should bounce here based on having bounced here, 16 times in the past. If I liked that trade, instead of buying a bunch of 28-cent contracts to lower my $2 cost of the initial one, it's so far out of the money. If I liked the trade, I would basically say, I'm going to buy a much lower strike. So instead of the $10 calls, I might buy the $8 calls. And I might buy more time than the one that I'm currently in.
Yeah.
So instead of averaging down the position, hoping it has to make a monster move to even come back for the average down position to make money, I would just get a much closer contract, maybe with a little more time, so that if it did come back, the new position would pay a lot better than trying to worry about if that move would even still cover the monster loss of the first one.
Yeah, that's great.
You know what I mean? So instead of hoping that the first one comes back, just take a much better current position.
So that's a new position with a new thesis, which is great. I think we get kind of married to the ones that we've had, and there's this maybe tendency to just add to what we have to make that cost come down, where what you're saying just makes better sense. It's much more probable of profiting, and yeah, that's great. Let me say this too. We got one more trade to look at. You guys, we've got over 100 people still here, and definitely I know that I've missed some of the questions, but we're going to look at one more trade and then just kind of open it up for a Q&A if you guys can hang out another 10 minutes or so. But send us these trades. Definitely submit us trades, because that's going to be going forward one of the main, focal points of this show. And I mean, I do think it's a show. Yeah, of course, this is a seminar and it's educational, but I hope you guys are being a little entertained out there today while the market's closed. All right, Mike, this next trade, I want this person, if he is here, to not feel so bad about this. This person, this is the Moderna bleed down we were talking about. They got in here based on nothing, but it was just falling. The sentiment, if you remember the sentiment that day, that Friday, it was just people were just hating on it. It was just a bad sentiment. Person got in there on a put position. One moment, please. Right here is the in, and got out right here based on this huge green candle, and then watched it, and just felt really horrible. I actually had all kinds of trouble with this. This person confided, definitely had issues because they felt this was a horrible exit, and look how much money they left on the table. And I'll also say, even went as far as, let me go back to normal mode, sent me these graphics, right? Where he showed, well, here he got this 318 move, which was great, but look, I would have got a 1540 move if I held right here to the very possible. So anyway, this person clearly put a lot of thought and had a lot of regret and angst about selling this so soon. So I have my thoughts about this entry and this exit, but if you entered here, what do you think about this exit right here, Mike? Based on that candle.
So I can't answer that question without asking a question first.
Yes.
My question first is, what were the trade intentions when you entered it?
Apparently it was just
I asked.
Yeah.
Do you have the answer to that? Do you know?
Yeah, definitely. Jumping in, he said he saw the downward move and he just felt like the sentiment was bad. He just wanted to jump in short term to capitalize, with puts on this downward momentum.
Okay, so did he jump in and capitalize on a short-term downward movement?
Yes.
Yes, so he did exactly what he wanted to do.
No doubt.
Now, here's how I look at this. If your intentions are a short-term downward movement, look at the entry point, look at the next candle, look at the next candle, look at the next candle. So we have some good downward momentum. Look at that first green candle. See how it's a little bit smaller than the one before it?
Yep.
and then the very next candle is red, but it's even smaller than the one that's before that,
Yeah,
that tells me that the downside momentum dried up.
that's right. That's
The
right.
next candle is a big volume green candle.
Yep.
So if your intentions were short term, capitalize on the downward movement, you did exactly what you wanted to do. If your intentions were to, swing or day trade, that's again, it's obviously, you could have adjusted the exit criteria. But if you're not sure of why you're getting into a trade, or you're just saying, hey, you know what, it looks like it's going down, the entry point is great there. If you look earlier, it looks like it's basically an orb low break.
Yeah, yeah.
So that's a good entry point. And then the downward momentum slowed dramatically and then reversed. So that's a good exit if your intentions were short term. So I think what I'm going to guess at here was that the intentions were short term. And then at the end of the day, when you saw what it did, your intentions go, oh, yeah, I didn't want to hold it short term. But
That's
in the
right.
heat of the moment, you're telling yourself, I just want a short-term downward move. You got that. The downward momentum slowed and reversed. So you can't be mad at the exit.
Right, right. And
Now,
yes, people
one
are.
thing I can add to that.
Yes.
The exit, it never got back to the entry. So if you have a little more risk tolerance, what you can do is, and again, if I don't know if this was an orb entry, I see that on the chart that it could have been. So I'm just using that in my mind because that's the way I look at the chart. You could have let it go against you enough to see if it's going to test that level and hold as now resistance.
Right.
But you have to understand also, if you do that, the profits that you have are going to go away. So again, it depends on risk tolerance. And when you say capitalize on short-term momentum, I'm kind of thinking in my mind that what that person is thinking is, I just want a nice downward move based on, I don't know why it's moving down. I just see that it's moving down. I want to capitalize on that. And you did exactly that. Looking in hindsight, of course, you can go back and change things, but you have a very clear downward momentum that dries up and then shifts to the upside. So you did capitalize on short-term downward move.
Yeah, and let me add this too. Someone commented, like Mike, I appreciate this. Mike commented that the big candle is on this doji right here. So I went back and just looked up what they sent me, and sure enough, they exited at this candle, right? Which is even a better exit, right? Because that was the candle that I've got this marked incorrectly right here. So that is part of it too. So when you add that into it,
It would depend on if you saw that candle finish.
Right at the end of it,
Right, because if that candle finished looking like it would, I wouldn't want to get out there. Because
yeah,
yes, you have that big upside momentum in that green candle right before it, but the very next candle says there's just an equal number of buyers and sellers.
that's right. With that much
So in
volume,
that case, yeah,
right,
maybe give it another candle. But if you got out on the big green candle before that, or if you got out when you see that candle open and continue to go upwards, I think if you're trying to grab short term, you did what you set out to do. If you're exiting after that candle finishes forming,
yeah,
then you can look at it and say, well, hold on for a little bit more, because that candle is 100%, the buyers and the sellers are equal.
that's right. It
So
could
it's
go.
got downward momentum, it had a little pop up, but the sellers are telling the buyers right there, wait a minute, you guys don't have the ball yet. We're still trying to figure out who's got it. And the next candle shows that the sellers had it. So if you let that candle finish, it's a different story. But I'm guessing with that big green candle first and that second candle that shows indecision, in the heat of the moment before it finishes, it would have had an upward movement. So that would have clearly said, hey, it made a nice drop and now it's going to reverse.
Yeah,
Now, again, this is hindsight, right?
yep.
So we can look at that and you can say, I don't know the market sentiment. I don't know, was everything dropping that day? Was there news for this? I kind of remember this trade, but I don't remember the specifics of it. So there's a lot that goes into it. So that's one of the things where I don't like talking about stuff after the facts.
Yeah.
But, again, this is how we can just get a second set of eyes on it. So to
So
comfort this person in their massive despair, I would say, listen, you had a downward movement, the momentum dried up, and then you saw a big move to the upside. You did what you wanted to do. You can't be mad at that.
Right. That's right. And what does it tell you about his mindset? I mean, he made these graphics, with the that's the tool on TradingView. It's I've seen it a few times, but he made this and he made this and he sent them all to me. I mean, that's telling us something about this person has really looked at this trade and thought, if only I could, yeah, that would have been such a great point to exit. And like, I just don't think anybody makes perfect exits,
Yeah, it's a great point to exit, but in the heat of the moment, do you know
Yeah.
that's where it stops?
Right. That's right.
Right?
Yeah.
Look at, so on that second screen, go to where the cross is in the middle of that red graphic. Yeah,
Okay.
as it's bouncing up there, why would that not be a great place to exit? Right? The low, go to the left a little bit, those two green and red candles that are the same size just below you there.
Yeah, right there. Yeah.
Yeah.
We're right
Why
here.
wouldn't that? Yeah, right there. Why
Yeah.
wouldn't that be a great place to exit?
Sure. It would
Right?
be.
So we can look at the chart at the end of the day and say that low point, of course, that's a great place to exit. But that right where your cursor is right there, why in the heat of the moment when you just have those two candles, they both bottomed out at the exact same point. One was red, the next one was green. So why wouldn't that be a great place to exit?
Yeah.
Right? So in the heat of the moment, you don't have the benefit of saying at the end of the day, this would have been a great place to exit. You have a reason to exit, you take the exit if it meets your criteria.
Yep.
Like
That's
you're pointing out right now, there's 3 points, 4 points on that chart where you could say that would have been a great exit. The exit is great depending on your trade style and intentions. If you want to scalp these trades, those are great exits. If you want to swing trades, that's a horrible exit, right? So you also have to take into account your trade style. If your trade style is scalping in short term, those are all good points to exit. You can't go back later and say, I shouldn't have exited. So the only thing I would say on the graphic on the left there is, again, I don't know if this was an orb opening trade, but that's how I look at the chart. So if it was, I might give it back to that right about there,
Yep.
right? Because that's where it broke the orb low. So I would give it back to there to see if it tests that level and holds as resistance
right.
and
Right.
then makes another leg down. But again, you've got to understand that if it does that, you're giving back your profits.
Yeah, that's the trade style. Like you may be comfortable going from here to here, then you get out relatively even or with a small loss, and that's okay. Where this person may not be comfortable with that. So
Right.
so where do we cross the line? Where is the line between analyzing your exits after the fact and using that as constructive ways to grow as a trader versus when you cross over that line and you just have extreme regret and you're pissed and maybe you even quit trading because of this? How can we walk that line, or how do we know, in your opinion, when you're going away from analysis from a mindset of learning and improving and you're just wallowing in vast regret? How can we recognize when we're crossing that line?
So the whole thing is, to me, it's a discovery period of finding who you are as a trader. And we talk about this a lot. You've got to know your trade personality. So there was a point where I would look at charts at the end of the day and say, oh man, I screwed that up. I should have done this. I should have done that. And then there was a point, and I don't notice where the change was, but there was a point where I looked at a chart at the end of the day and said, okay, that's what happened with the chart. It wasn't so much, oh, I should have done this, I should have done that. It was more looking at, okay, I had the reason to exit because of this. Looking at the end of the day, that reason still held, regardless of what it did after that. The reason I closed the trade still makes sense at the end of the day. Now, there were trades when I was starting out as a trader, I would close the trade, and at the end of the day, I'd look back at it and say, there was no reason why there was nothing in that chart that said close the trade. Those are the ones I would get pissed at because I was trading on emotion.
Yeah.
So I'd close the trade. At the end of the day, I'd go back and I'd look at the timestamp of why I closed the trade. I'd look at the chart on that timestamp, and I couldn't remember why I closed the trade. So I'd look at it and go, why would I close the trade there? There's no reason. There's nothing in the chart that said close.
Yeah.
Later on, it got to the point where I would look at a chart and say, okay, yeah, if I held, it would have been a great trade compared to what I got. But looking at the chart, I see why I exited the trade when I did.
Yeah.
So again, I don't know what the switch was. It was discovering who I was as a trader, and who I am as a trader is that short-term scalper / day trader. So I'm looking for those shorter time periods and shorter term support and resistance to enter and exit. if I look back at the end of the day and see that I had a reason to exit, I don't care if it went, 16 points in my direction after that, because in the heat of the moment, I had a valid reason to exit. And there was a switch between being able to look at that objectively and say, I had a valid reason to exit. And when I started trading, look at that and say, oh yeah, but if I held anyway, right? So there's that difference there. Once I found out the type of trader that I am and my trade personality is scalping and day trading, if I had a good scalp in a day trade, what it does after that, there was a point where it just didn't matter.
And I think you've told me it took you like a full year and a half to get, was that about the time frame you said, to where you could not look
From the
back?
point where I started trading. So my journey was basically the first year of trading, I did really well. And I did really well because the market was basically just going in one direction. So I was making money, but I didn't know how or why necessarily. It wasn't guessing. I saw a pattern in the chart, and I was trading one specific ticker every single day. So I knew why I was doing what I was doing, but I didn't understand how the market worked. Okay, the market just went straight up. So I would watch this ticker for the pattern when it would reach a certain level. It was support and resistance, but I didn't know it was support and resistance at the time. It was one of those things where I just saw what was going on and figured out, okay, it kind of does this. So I was making money because of that. The
Yeah.
second year, the ticker that I was doing that with, the pattern of it changed. It wasn't doing what it was doing on a daily basis anymore. So the second year was when I started losing the money that I made the first year. So that's when I kind of went through this whole, wow, I was making money and now I'm not. Something's different. Something's going on. And that's when I realized I didn't understand necessarily why things were doing what they were doing. I kind of in the back of my mind understood it, but not really like at the forefront of my mind, like I could explain why it was doing what it was doing. So the market was helping me make money. So the first year was good. The second year, I started giving that money back. And that's when I started trying to figure out, okay, I've got to figure this out for sure. There's something to making money and there's something to losing money. And I don't know the difference. So an entire, from the day I started trading, it was like a year and a half ish where I started realizing, okay, I kind of get what's going on here. I'm a slow learner. So, I mean, you heard Kang say, I think 8 months
Yeah.
from the moment he started options to profitable. I was making money at first, but it wasn't because I knew what I was doing. So for me, the whole process was about a year and a half, maybe a little bit longer, a year and 7 or 8 months or so, until I got to that point where I was like, oh, okay, now I see like all that dumb stuff I was doing. Now I understand why it was dumb, or what I needed to learn.
Yeah, so that's a big key part of this. You're talking a year and a half, King, 8 months, various people. It's a series of years for most people, it seems to me. So, if you're out there and you've been trading 3 months, 6 months, and you're having these problems of holding too long, or selling too soon, or whatever the case might be, that's what I'm hearing is like you have to be patient with this. And someone asked if it's ruining the rest of your day, like your worries about reflecting on your trades, and if it's ruining your day just for the rest of the day, the rest of the night, does that mean you're doing something wrong? I thought that's an interesting question. Like, should it affect our entire day, or should we be able to compartmentalize this learning through losing? What are your thoughts about that? Does it ever ruin your day after the trading day is over?
Okay, so two different traders we're talking about here. Should it ruin your day? No. Why? Because a trade is just a trade. You had a reason to enter a trade, you entered. If it lost money, you closed the trade. You did what you were supposed to do. You're a mechanical trader, you lost money. That's part of trading. That should not affect your day whatsoever. Does it? Yeah, of course. Nope. For me, at this point in my trading career, if I have a losing day, it doesn't really affect my day, because I know that in the long run, I have few losing days compared to the times that I profit. So I know that a losing trade or a losing day is just a losing trade or a losing day. It's not my career. It's not going to affect my income in the long run. It's part of trading.
Mm.
When I was trading starting out, if I had a trade that I thought should have done something and it didn't do it, it would destroy my day. And people around me knew, hey, you know what? Let's not invite Mike out tonight. He's in a bad mood, or the market turned, or whatever. So it
Yeah.
totally it dominated my day. If I was in bad trades,
Right.
and then even worse, if I was in a trade that I thought should have done something and it didn't, like, oh, this is a bear flag breakdown, and then it just reverses and goes up. I was like, oh, it's a bear flag. It's got to go down.
I
It
agree.
would destroy my day. But now I'm at the point where, again, I'm a human. I have emotions, but I'm very mechanical when it comes to trading. If I take this trade because of this entry and it's invalidated, I close it. And if I lost money, it's just a losing trade. There's going to be others that cover the loss and then make profit. And then there are days where I will take the entire day ends up red. It happens. Luckily, at this point, it doesn't happen often. So when
Yeah.
it does, I don't go out into the day thinking, oh man, I'm such a screw up. I can't believe I lost money. It's part of trading. I don't care how long you've been trading. You're going to have losing days.
Yeah, I always like to ask you, how many losing trades did you have this week? Like, when was the last like red day? When was the last time that happened to you? Is it recently, or has it been a while?
There was. I don't know. I haven't really looked at February as a whole yet, but in January, I think I had 2 losing days in January.
Yeah.
So it's not, I mean, any given week, there could be a day where I have, so I try within the entire month, I try not to have, and I can't control this all the time, but I try not to have more than 3 losing days in a month.
Yeah.
So if I have a losing day, it's whatever. If I have a second one in the same month, it's whatever. If I have a third one, it's like, okay, is there something about this, like my personality right now? Is there something where I'm trying to rush into a trade? Is there something where, I'm anxious about a trade? Like, why am I starting to make more losing trades? And I can have a losing trade on any given day, but for the entire day to be red, it means there's something that I'm just not seeing. And it could be just, the choppy market. I like this trade, I enter it, and 3 candles later it reverses. Okay, bad trade. Next one, it's doing the same thing. Okay, next one. Oh man, I just don't have a grip on today, right? That happens. If that happens more than 3 times in a month, I start looking at it like, is there something about me that's changed? Like, again, am I anxious about trades? Am I trying to force something? There's something going on there where if it happens too often, it might not be the market condition. So I try and dig down into what's causing that. But otherwise, if I have 3 losing days in a month, I'm kind of okay with it. It's just it's going to happen. So sometimes it's me, sometimes it's the market. I write them off. If I have 4 or 5 losing days in a month, then it's definitely me. There's something, and it might just be I need to stop trading because the market conditions aren't giving me quality setups. So you know what I mean? So it might be the market conditions, but it might be me trying to force trades in those conditions where I might say, hey, you know what? I'm only going to take 1 trade today, or maybe a second one comes up, but I'm not looking to take 15 or 20 trades. I might just, hey, you know what? The first hour, I'm not comfortable with these choppy. I'm not going to trade right now. I don't see a setup.
Yeah, patience and controlling. Yeah, I did. How'd you do this week? Like, this week, I didn't trade very much because I've been busy with other things. I definitely learned a lesson this week. I took 10 trades this week and lost 4 of them, and they were all controlled losses. I mean, it wasn't like a huge thing, but I definitely know why I lost those 4 trades and didn't do super great amounts of profit on the others. Is because when I get to a certain amount of busy with other creative projects or other things I do here at Black Box and other places, I just don't need to trade when I'm really busy. And I was too busy to do it this week, and I tried it anyway, and it just wasn't good. So it reiterated that rule for me, and I just can't be super busy and try to jump in and even scalp things. It's just part of me. So I just know I can't trade when I'm busy with other stuff.
But
So
that's an awesome way to learn it, right? You had a rule, and you kind of, I don't know if you broke the rule intentionally, but maybe you were just trying, oh, hey, you know what? I've got 2 hours free. Let me trade. So you had a rule, you broke the rule, and in the end result was basically it reinforced why it was a rule.
That's right.
So now next time you have a lot going on, you might not sit down and say, hey, you know what? I've got 2 hours to trade. You might sit down and say, I'm going to look at a chart, but I know this mindset is where I typically don't focus well.
That's right. If I'm not super focused on a chart, I can't be at all mechanical. And yeah, I mean, I had 10 trades, lost four. I lost 40% of all trades this week. What about you? How'd you do this week?
I actually had a very good week this week and last week. February is turning out to be a pretty good month. What do we have? Yeah, this is the last week of February. So February, or for the trading week at least, February is turning out to be pretty good. January was pretty good, but I had, like I said, there were a few days where I had some hiccups in January.
Yeah.
So what I will say for those that aren't doing well right now, when I say I'm doing well with February, what I'm doing is shorter trades with less profit than what I would have been doing, say, 6 months ago.
Yeah.
So the end result is still I'm doing very well. The difference is I'm not buying something today and holding it for 3 weeks, right? I'm buying something today and holding it for, 30 minutes. Hey, I might buy something right now and sell it in 3 minutes, right? So I'm
Yeah.
doing a lot more of shorter term trades, but what I'm finding, and again, I'm just naturally a day trader and a scalper anyway, so this just fits my personality. But what I'm finding now, instead of those longer term swing trades where you just buy them and, uh, let's say 7 or 8 days later, the contract went from $3 to 670, right? What I'm doing now is capitalizing on these smaller movements and just taking more of them.
Yeah.
So it's a matter of these smaller trades are adding up to the point where it's actually equal or better than some of those longer term swings because I'm just locking in profits. Boom, next one, boom, next one, boom, next one, and just repeating over and over. I see an entry, I like it, I'm willing to take it, boom, I'm in. Okay, here's a potential resistance. I see price action going sideways, just lock it in, boom, move on to the next one. So it's a lot more work, but it's still paying off the same or even better than some of the other trades. It's just a lot more work because I'm focusing on shorter term trades. So I'm going to have to do more of them to equal one longer swing.
Yeah. You're
Hopefully
adapting.
that makes sense. It's a lot more work. The results are about the same, but there's just it's cramming a lot more into that same time frame. Whereas prior to November, we could kind of relax. You buy something now and just look at it in a week or 2 weeks later. Whereas now it's more intense, more focused.
Back in like September and October, did you ever have like a 45-minute day? I mean, I know you're on the chat bell to bell, but like as far as like trading and managing trade, did you ever have like a 45-minute day and you were done pretty much? Or is it always more than that for the full-time trader?
There are days where I could have but didn't.
Yeah. Okay.
So I don't know if it's a discipline thing. It's to me, and we've had this conversation offline before. It's
Yeah.
let's just say you have a goal, and I don't do dollar goals for the day. Like I'm going to trade what the market gives me. But let's just say someone says, "Hey, I want to make $1,000 every day." You go into the market, you make $1,000 in the first hour and a half. You've made what you wanted to make, so walk away and you're good, right?
Yep.
I look at it and say, I've made what I wanted to make, but if another trade comes along, like I'm going to take the trade. I don't want to condition myself to say, here's a good trade entry, don't take it.
Right.
So I don't do setups where, oh, I've got to make X amount of dollars or X amount of trades. So I'm going to trade the entire day if I get a setup that I like, for the very reason that I don't want to condition myself ever to say, here's a valid entry, but don't take it. I don't want that mentality to sink in. So I've had days where the first hour of the day I've made enough where I'm like, okay, I can just go down to the beach and hang out the rest of the day. But I'm going to sit here and watch the charts. And then if another entry comes along, I'm going to take it. And sometimes I've had a good start to the day and given a little bit back. Sometimes I've added to it. So again, if you have that mentality of I want to make certain money per day and you make it and walk away, I'm good with that. I'm not going to yell at anyone for that. Right? It's a good strategy. You're trying to make $500 a month to buy a new truck. Cool. You made $500. We'll stop trading. Right? Why risk it? You made what you wanted to make. Go buy your truck and or make your payment. Whatever.
Yep.
Run away. You've done what you wanted to do. For me, I can't do that. I have to watch the charts and I have to say, oh, here's a potential entry. I've got to watch it and see what I can do with it. I don't have the mental ability to make a good amount of money in the morning and just walk away and stop trading. I like watching charts. I like
Never know.
interacting with other people. I can't walk away after, the first hour, even
You
if the
never
money
know.
says go for it.
Yeah.
I like watching charts.
You never know what's going to happen because sometimes the Moderna CEO will delete his Twitter account and sell a bunch of shares, and people interpret that certain ways, and then all of a sudden massive things start happening, right? So if you're paying attention to that, you can maybe do something when things happen. So I like the idea of, you know, things happen on a moment's notice sometimes. So you're always, paying attention to it, and you're not just going to say, all right, I made my X profit, and I'm going to just turn off the computer for all day.
Yeah, let's say you've made, and this okay, let's just say you have a maybe not a specific dollar amount, but you had a good day, right? And there's 2 hours left in the day, and you've done something in the day that you're like, all right, you know what? If I stop trading here, this was a good day. I did what I wanted to do. I made money. I made my goals. I made whatever. Like, this is a good day. There are times where you can just say, you know what? I'm done trading, but I'm just going to watch the charts because I have nothing else to do, or because I want to learn, or because I want to, continue to improve my charting, whatever the case. So I'm going to sit here and watch these charts anyway. Then you see a big drop on SPY, and you see UVXY spiking, and you can't figure out what's going on, but you hear some chatter about this or about that. And then maybe you're on voice chat and you hear someone call out news. And then you say, hey, you know what? I'm here, I'm watching something. Let me just pop in a small trade, right? Maybe you're happy with what you've done, so you're not going to take big risk, but it's there and it's happening, so put on a small trade. So like you said, you never know what's going to happen.
Yeah.
Like, people ask that with flow all the time. I only have a 2 hours of the day that I can trade. What's the best 2 hours to watch flow? Well, there isn't. I mean, we could see it right at the opening bell. We could see it at the closing bell. We could see it at lunch. There isn't a best time. Things happen throughout the entire day. So since this is what I do for a living, I don't have a problem sitting here watching the charts from bell to bell. If I'm not trading, or if I've made what I wanted to make and I'm feeling good about the day, this is what I do. So I'm still going to sit here and watch the charts. And there are times where I've said, hey, you know what? I don't feel like trading anymore. I'm feeling good about today. It was a fun day. I had some great trades. I'm done. And then something comes along and I'm like, oh, you know what? What the hell? I'm going to take a small position here anyway.
Do you ever just say screw it and you just go to the beach and you just you abandon chat, you tell Charlie you're having technical issues or something, and you just go to the beach? You can tell him.
So
Tell him.
here's the funny thing, right? As a trader, and again, I don't want to sound like I'm, an amazing trader by any means. I've been doing it long enough, and I've figured out my personality and what works for me. So I'm a very disciplined trader. I still make mistakes. That this whole thing, that we're doing here on Saturdays, I'll put my own trades in here as examples from time to time. I make mistakes, but I feel like I'm a very disciplined trader. The one thing on the flip side of that is, if I know the markets are open, and I'm not an anxious person, I don't have anxiety for any situation on earth except this. If I know the markets are open and I'm not watching the charts, I'm anxious about, oh man, I could be making trades right now. So when I'm watching the charts, I'm disciplined enough to not take a trade if it's not the right setup. Yep. But if I'm not in front of the charts when the markets are open, there's this anxiety to me where it's like, oh man, I wouldn't enjoy being at the beach. I'd be like, oh, there's something going on in the chart. I've got to go find it. I've got to watch it. I've got to be a part of it. I'd be sitting at the beach miserable. I wouldn't enjoy it.
You gotta what? I mean, this is your career. That's what you're saying. You don't want to miss things, and that perfectly makes sense to me. All right, so let's do this. Couple questions and then we'll wrap it up. Definitely someone DM'd me and said, any show you guys are a part of, it just has to be 3 hours. And then they went on to say they love that. So they weren't complaining, but
you know what? I don't have the ability. Once you get me talking about trading, I just don't have the ability to shut up. So I apologize to those who it's annoying to, but I mean, man, I just love trading and the whole idea of it, and being able to learn from other people that are better than me. I'm just so thrilled with trading and the markets, and it's just, once I start talking, you got to take the microphone away from me.
Well, I no, it's awesome. And here's a few questions. All right. So first off, as we're wrapping up, just want to let you guys know, next week we don't have an episode. I'll be interviewing Hell's Bells for Riverside Chats. That's also available to you guys as members. I'll be posting the link. The word will be out there. That's my podcast I do where I interview black box stocks moderators and very fascinating people. But that's him next week, and I got to tell you, I'm really looking forward to that. That's going to be something else.
Yeah, I'm going to jump in here. For a lot of you guys, you might not know Hells because he's actually in the Roadhouse. He's not in main chat. If you guys are members of Black Box that are not part of Roadhouse, Hells Bells is a phenomenal trader. Like he's another one where he's got this sense of humor where he'll say something and it'll just crack you the hell up. Right? He's not in the main chat, so some of you guys might not know who he is, but he's a moderator with Black Box. He is an absolutely phenomenal trader. He's got a great outlook on the market. So if you're not sure of who he is because you're not in Roadhouse and you're going, oh, I've never heard of him, listen in on that interview. It's going to be amazing. Hells is just he's got this market outlook that is just phenomenal. He trades great. And I'm actually interested to learn the part about him that's not trading related. So I'm hoping River dives deep
Right.
into the outside of trading aspect because I know Hell's a little bit as a trader. I don't know anything about him whatsoever, personality wise, outside of that. But for those of you guys that don't know him, he's in the Roadhouse every day. So he is a moderator with us. He's great at what he does. Definitely listen in on that conversation.
Yeah, I'll say this. I'm telling people this all across the land. If you're unaware of Hell's Bells and his work at the Roadhouse within Black Box Stocks, do yourself a big favor, because you don't want to go see a band that you don't know any of their songs live. And then later you learn their songs and you're like, oh, I wish I would have known this song when I saw it, right? You missed out. So this is going to be similar to that. Go to Roadhouse a couple times this week and spend some time listening to Hell's Bells call out the flow live. It's something to behold. I'm telling you, it is. Um, you should do that. Get a little bit familiar with this guy if you're not familiar with him, and then come back next Saturday. And I will do my deviant best to get at some because the point of Riverside Chats is it's a trading podcast, yes. But the point is to go into detail of these moderators and leaders in our community about stuff that is beyond their trading life, stuff they believe in, stuff their worldview is. That's the point. So I would encourage you to tune in next Saturday if you can. And if you're not aware of Hell's Bells, go check out what he does every day on Voice, and it would be that would be a way to get a lot more out of it. So the point is, we will be back with you on what went wrong in a couple weeks. But there is a couple questions, Mike. Don't want to leave them hanging. We'll
Hit
say
me with them. What do we got?
there's a lot of compliments. People saying thanks for the time. They're enjoying it, especially a lot of your input, Mike. They really appreciate you providing guidance and taking time on a Saturday. Of course, it's not a Saturday, but taking time on an off day, etc. But here's one. One person says, "Is TradingView your primary trading charting platform?" It isn't. Is that correct?
So I actually don't use TradingView.
Right.
Now, some of you guys are like, wait a minute, I see you post TradingView charts all the time. So my setup is 4 monitors. And so I have a laptop in front of me as one of the monitors where I look at flow. And it's easier for me to jump on TradingView, grab a chart, and post that from the laptop than to open my trading platforms on the laptop because I don't trade from the laptop. It's just flow and the chat room. So I do post TradingView charts because it's easier to screen grab them right from there and put them right in the chat room. I actually don't really trade off of those charts. So you will see me post TradingView charts. It's not something I really, during the trading hours, I don't really look at it too much. It's easy for me to bounce back and forth to that platform because it's on the laptop rather than change the screens that I'm actually trading off of. So I do reference it. the main screen that I'm trading off of isn't TradingView, so I guess I'll put it that way.
Sure, sure. And they're just saying, and if you do use TradingView, you definitely need to pay for the live data. They were saying also, should they buy the live data feed, et cetera, and which ones? But
yeah, even if you're using TOS has an option for live data. It's free on TOS, but your default settings are not live. So always make sure whatever platform you're using, you absolutely want live data.
yeah, sure. Here's a question. Someone asked, do you ever play the other side of support? Say if you're in a call and support breaks and it continues downward with conviction, do you ever jump in the other side and end up buying puts relatively quickly after you get out of a call? Has that ever happened?
Relatively quickly, no. So
Right.
I'm not exiting a position looking to take the opposite side. I kind of, I won't say it's rare. I do trade like that, but it's not exit calls, immediately enter puts. What I need to see is a valid put setup. And if I'm in a call position and it breaks a support level, I'm going to close the call position, but that doesn't mean I'm going to enter. It's not a valid put scenario for me just yet. That's kind of confusing because if it breaks support, you want to be in puts. But if I just got out of a call position, I'm not looking to reverse that and go the other direction. So I might enter puts if it breaks that support level. I close my calls and then it comes back to test that level. It's now proving to hold as resistance and then drops again. Then I might enter the put.
But very
But I'm
important.
never, I don't close the call and immediately go to the other side and enter puts just because I close the call. So I don't do that type.
That's right. And some people call that flipping. I've heard that called that. Some newer traders do that. They'll say, "Oh, it's going down. I'm wrong." Well, I'll immediately jump in with a put position, not really best on anything. I agree. I also don't recommend that, but I
So
do
I'll
know.
tell you why I don't do that. I used to do that when I started trading because if I'm in a call position and it goes against me, I'm wrong. So I should have been in puts. So I'm going to open puts. What would happen, and I'd swear every single time, probably not, but that's what's in my mind, right? So I'd swear every single time I'd get into a call position, it would reverse. I'd say, oh, I was wrong. I get in puts. It would reverse. I'd say, oh, I was right the first time. I should be back in calls. That would reverse. And I would just go back and forth losing money on 17 trades in a row, not realizing I should have just stayed in the one trade the first time. Right. So I did that a few times when I was first starting out. And then I came to the conclusion, if I'm wrong, just you're wrong, get out of the trade and step back and reevaluate.
Yeah.
Don't just say I was wrong, so I'm going to do the other side of things. Right.
Don't lose money both ways. You don't have to.
And I swear it's happened so many times where I
Yeah.
got into it. And this, hopefully you guys don't do this. I was really dumb when I started. I would be in a call position. It didn't work. I'd get in a put position. I'd lose on both sides. So then I'd say, oh, whatever. I'm going to look for another trade. Then I was smart, right? Super smart. I get in a call position. I lost money. I got in a put position. I lost money. So now I'm going to expand. I'm going to do this brilliant strategy. I'm in a call. It's not working out. I'm not going to close it. I'm just going to buy a put also.
Oh,
So now I'm in a call and a put for the same damn ticker, and they're both losing money.
yeah. You've got
So
an
that was
unintentional.
my discovery phase where I had to figure out, I don't know what the hell I'm doing.
Yeah, that's called the unintentional strangle, and that's not a
That's the
good.
unintentional strangle, and I was a master at it because I couldn't figure out calls or puts, so I just buy them both. Here's the end result of that: either you lose money on both of them,
Yeah.
or you make money on one but lose money on the other, and it doesn't cover the loss. Like the loss was always greater than the amount that the profitable side made, so you end up losing money no matter what you do.
And even if it somewhat covers the loss, it's still just not enough profit to like. That's my problem with straddles. I know some people do straddles with great, I'm just doing something wrong because every time I've tried to straddle, like I make a little bit of money, but it's just not enough to like justify the stress that it caused. I just can't stand having things going both ways at one time. It's just I don't know.
That
I'm
would
not
drive
wired.
me nuts.
I'm not wired for it. But hey, some people throw strangles and straddles at certain times and make killings. I mean, it's just you got to learn what you're good at, and then once you learn what you're bad at, I don't know. I guess you could improve, but I just stay away from it if I'm really bad at something.
Smart man. If you're not comfortable with it, don't do it.
All right, listen, you guys are great. In Texas, Ontario, we had people from all over earlier. Los Angeles was checking in. Malibu, We know people in Malibu. I wonder if that's our friend. Anyway, people from all over came today. I really appreciate you guys. We'll be back in 2 weeks with another What Went Wrong. I hope you guys, we're going to be soliciting trades from you guys, me or Mike. Contact either one. We'd love to feature your trade and analyze it here on the show. And like I said, we'll be back in 2 weeks. I'll see you next Saturday with the podcast. The wild show of Riverside Chats will be back up and running. And Mike, what do you got? You got any parting wisdom? Because I sure don't. I'm ready to go jump literally off a waterfall up here in the mountains. We're going hiking to a waterfall and we're going cliff jumping. That's a very southern thing to do, isn't it? Is that a very go out in the woods and jump off a waterfall into a forest pool? That's what
Well,
I'm.
sounds like fun, but it sounds like something I would not be doing. So I don't really have any parting words today, other than one thing I do want to ask of you guys is this is a new project for us. Okay, so we're just trying out this what went wrong. We had a good response to a post that River did about a trade that went wrong. So that's how this was created and came about. Let us know what you guys want more of. How can we make this better? Right? This is the third time we've done it. I like the concept of it. Like I said, I mean, I can talk for 4 hours straight about options and you guys will get sick of it. We're trying, at least the idea would be to make them a little bit shorter, but you can see we just don't have the ability to do that. But give us some feedback. Let us know how we can make this better. This is new for us, the format of it, the concept of what we're talking about. Let us know how we can make it better to make it just better for you guys. Like, what do you need from us to make this something that's something you would want to tune into every week or catch the replay if you can't make it live? How can we improve upon it? Give us tips, give us things you don't like. It's not negative if you say something you don't like, please. That actually helps us out.
Yeah.
If you don't want to be mean to River, just send them to me. I can handle the abuse. Tell me, hey, dude, shut up. You talk too much. Anything negative or positive. Please give us some feedback. It'll help us out and make this a better result. And so my parting words are, I'm actually having a really fun time doing this, getting to look at some trades, getting to talk. I'm not on chat during the market hours, so this is my chance to talk to another trader and experience other people's trading. I'm having a great time doing it. So I love hanging out with you guys, but definitely give us some feedback, good or bad. I promise I won't take it negative. The negative feedback will help us improve this. And I'm looking forward to doing more of them with River. Thanks for hosting and hanging out with me on a Saturday. Definitely appreciate that. And I will see you guys tomorrow at the opening bell.
Oh, that's right. It is opening tomorrow. How do you approach it? Last question. How do you approach the open after a 3-week weekend? Are you just to the point where it's business as usual, or do you feel a little bit of excitement or trepidation? What are you thinking about for tomorrow?
So it's kind of mixed. It depends on the weekend. So sometimes I do a lot during the week, and after hours, I'm answering a lot of questions. There are times where once that closing bell rings, I just shut everything down. It's Friday, basically, because throughout the week, when the closing bell rings, I'm sticking around to answer questions and go over some stuff. So Friday at the closing bell, I pretty much shut things down and just walk away from the markets. So sometimes I do so much during the week that when Friday comes, I love it. Saturday, I love it. Sunday, I love it. And having an extra day off is it's perfect. And then there are other times where I'm like, oh man, the extra day off is nice, but I really want to get back to trading. Right. So I'm kind of mixed on it. Right now, I'm excited for tomorrow. So nice. I do want to get back to trading. I do enjoy the extra day off. It's a little cloudy still, but I'm actually going to head down to the boardwalk and the beach to unwind, relax, and clear my mind. And it's kind of my little meditation / exercise right before the market day comes again. So I like the extra day off, but sometimes I just want to get right back into trading. And this particular weekend, I do want to get back into trading. I'm excited for it.
Nice. Well, tomorrow, bright and early for you especially, it'll be there. And yeah, I appreciate your time. Yeah, I love it. Think that more compliments are coming in. I appreciate you guys like it. They seem to like the format and the length. They just don't want any more beach talk because they say they're jealous in the Midwest.
Definitely do not follow me on Twitter. I don't post non-trading stuff often, but when I do, it's usually the sunset.
Yeah, that's true. It's the sunset over the
The
Pacific.
sunset over the Pacific Ocean. If you guys want a glimpse of that, I think I posted one just a few days ago. You can jump on there and see the glorious backyard of the Pacific Ocean, the sun setting over it. It is so beautiful and calming. You can see what keeps me sane during a stressful market. Market closes, I go view that sunset over the Pacific, and everything's right in the world again.
So have a great day in the Midwest in late February. All right. So
I keep forgetting it's the middle of winter. It's 75 degrees here. Everyone's in shorts.
yeah,
I keep forgetting that it's actually snowing at other parts of the country. I'm sorry, guys.
no, we're both lucky in that regards. I mean, it's close to 60 here in the southeast as well, and definitely like we're about to go jump, like I just said, off waterfalls. I mean, it's a little bit cool, but it's not too bad. So I think we both kind of, you definitely come in first, but we both kind of win with the weather. The southeast, it's really nice. So nonetheless, we are going to go. I appreciate your time, everybody. Mike will post this on his YouTube channel. That is another thing that we do. Yes, it has been recorded. Some people have asked, but he'll post that when he gets around to it. And definitely appreciate you guys checking that out. If you have any questions or trades to submit or feedback for the show, hit us up, email or on Twitter. We'd love to hear from you, and have a great day out there. Mike, I'll talk to you soon, and everybody else, have a great day. We'll see you later.